Good evening and welcome to this session of the virtual live coaching classes organized by the Board of Studies of the Institute of Chartered Accountants of India. Today, we'll be seeing one of the important economic laws. As your syllabus is corporate and economic laws, we are now going to see one of the important economic laws. They are called economic law. The Foreign Exchange Management Act 1999 is called economic law because these laws have something to do with the economic background of the country, something to do with the economy, so something to do with finance, something to do with, shall we say, public finance. Therefore, awareness of this law becomes very important for a chartered accountant. In fact, if your goal is to become a CFO or a very senior finance professional in a large organization, definitely there will be a certain degree of, shall we say, foreign exchange inflow and outflow. And you will have to be aware of the law and the procedure involved. So what we are trying to do here is to give you a broad input on what it is all about. And this will keep changing. Believe me, the Foreign Exchange Management Act is constantly changed. Not the act, but the directions which are given by the Reserve Bank of India under this law are constantly changing. So what we are going to see could be the latest direction, but it may change. So always be aware that this is subject to change. And whenever you are going to apply or understand this law, understand the broad principles you are learning now, but the actual procedure, try to look it up in the current master circular, which would be issued. I'll talk more about it when I come in. Okay. So this topic is very exciting, very interesting because it deals with international finance. Later on, or maybe in your finance paper, you'll be talking about international finance, LCs, letters of credit, hedging, import, export, documentation, etc., etc. So this is peripherally linked to that. Any export or import ultimately would result in payment and receipt. That is governed by FEMA. It has to come through the authorized dealer, etc. So that is what we'll be studying today. So the foreign exchange. And this law has different applications for people who are resident in India or outside India because there are different rules for persons resident in India, outside India. Therefore, it becomes very important for you to know who is a PRII, who is a PROI. I will be using these abbreviations in my lecture, so get used to it now itself. I'll be using the abbreviation PRII, person resident in India, and PROI, person resident outside India. I will not be using the word non-resident, which is the vocabulary of the Income Tax Act. Here, you will not find the word non-resident. Rather, you will find the word person resident outside India. Nomenclature difference, but concepts remain same. Again, the way you decide whether a person is a PROI under this law is somewhat similar to the Income Tax Act, but somewhat different also. So we will need to understand that thoroughly. We also need to understand the concept of an authorized person, his duties, and what is his role. And then the most important part of this law, which is, I could say, the crux of the law, transactions in foreign exchange are divided into two: current account, capital account. So what is current account transaction? What is capital account transaction? We have to see. And then, as I mentioned, import and export of goods and services. We'll also be talking about ODI, overseas direct investment, the procedure, and also ECB. These are abbreviated. That's why I'm giving you the abbreviation. So in case you hear the term ODI, it means overseas direct investment, ODI. FDI, on the other hand, is foreign direct investment. ECB, external commercial borrowing. Then finally, we'll have to talk about, or rather today we will talk about adjudication of penalties and finally appeals. Now, what you should possibly know as an introduction is that FEMA is the successor, or FEMA was replacing an earlier act. Pehle there was a law called FERA, Foreign Exchange Regulation Act. Then in 1991, there was a huge change in the outlook of the way in which foreign exchange was to be handled. Okay, and over a period of time, the policy framework started changing. Though the law remained the same, FERA, slowly the movement was towards management of foreign exchange rather than regulation. Right? Before FEMA, the Reserve Bank of India was the sole authority controlling foreign exchange. Even banks, if they wanted to purchase foreign exchange, the only source in India was RBI. So if you are an exporter and you got money, you gave it to the RBI. Then the RBI gave it back to you for import, etc., etc. Now, under the new law, FEMA, there is an element of liberalization by which banks, certain authorized dealers who have been appointed by the RBI and money changers are now allowed to deal in foreign exchange. They can buy and they can sell. Okay. Earlier also it was there, but it was tightly controlled by the Reserve Bank of India. Now, banks have got a lot of freedom to enter into foreign exchange transactions. Though, still the control is there. We will see that. So the idea is, the purpose of this law is not to regulate, but rather facilitate external trade and payments. Means payments made in the course of import of goods, services, etc. For promoting the orderly development and maintenance of foreign exchange market in India. So the concept of a foreign exchange market is being considered. Earlier, the Reserve Bank of India pegged the foreign exchange rate. See, the rate of exchange, as you must be well aware, is the price at which you can buy another currency. For example, the Sri Lankan currency today is 4 rupees for 4 Sri Lankan rupees for 1 Indian rupee. I remember that in 1979, it used to be 1 rupee 50 paisa. Thereafter, it was around that, even recently, about 7 years ago when I went there, it was about 2 rupees, nearing 2 rupees. Now, due to extreme inflation in that small island and the currency rates are fluctuating. You actually gain by holding on to INR. One thing I realized when I traveled there recently, very recently, this year, in February when I traveled there, I found it was better not to convert till the last moment, because every day I got a better rate than what I got the earlier day, and so on and so forth. Whatever it is, these rates are quoted in a market called foreign exchange market, which is determined by the demand and supply of these currencies, right? Now, this is not part of the law. This slide is meant to help you understand the broad framework of the law. Conceptually, then we can go to the mundane sections. I can talk to you about that, etc., etc. So understand what it is all about. I have given you one example. I have taken a country that all of us are familiar with, the United States of America. Now, it cannot be denied that India exports to the United States of America. We do a lot of exports to that country in dollar. So we are expecting to get payment in dollar. So if you export to USA, I'll get payment in dollar. By the same token, I'm also importing from USA. While I'm exporting, not India, importers in India, people in India are importing. I'm sure all of us are using goods that are imported from the United States, right? So we buy it. So once we buy it, somebody is importing it and selling it to us. So that ultimately we have to pay for it in dollars. You might pay for it. I'm sure many of you here are proud of your iPhones, Apple iPhones. That doesn't fall out from the trees here. It is not, and it's not manufactured in India. So you have to import it. And even in CKD form, you have to buy it. You have to pay. Somebody has to pay dollar. You may pay INR, but somebody has to pay the dollar. So For import, I have to pay in dollar. For export, they have to pay in dollar. Now, at the end of a year, 1 year, let us say, who will have to pay more? I don't know the exact numbers, but I presume that we will have to pay more than them. Means, as a prudent accountant, if you net off these two transactions, suppose you say, sir, why I should pay him and he should pay me. Say net off the transaction, pay the balance. India will have to pay. Now, where will I get the dollar from? Please understand, my dear friends. The USA will not accept payment in Indian rupees. Sorry. That's not to denigrate the Indian rupee, because I think somebody very recently said that the US dollar is not strengthening. Rather, the Indian rupee is not weakening. The US dollar is strengthening. Okay, whatever it is. Generally, they do not want payment in Indian rupees. No problem. I have to pay in US dollar. Where will I get US dollar from? Indian rupee I can print. I means not I. The government of India can print. But US dollar we cannot print, I say. Come on. So, we have to get it. Usually, we manage with the current account itself. That is the important, but it's very difficult. Okay. So, we need to get from other sources. One of the major ways in which India used to manage the balance of payment deficit. This is called balance of payment. Literally account. India account with USA, USA account with India. Overall, all importers from India, all exporters out of India. Net off. What you get is what I owe. Similarly, mirror image, that fellow will have an account now. It will be in dollar, it won't be in rupees. It will be in dollar. So at the end of the day, I have to pay him dollar. Where will I get it from? So I used to have a simple solution. I used to go to a body called the International Monetary Fund. And I used to borrow. Straight away. As a country, we borrowed. Dollar we borrowed. You understand? And we came. So this kept on going. At one stage, we became so heavily overdrawn with the International Monetary Fund. They said, look here, Baba, we have no problem. You guys are borrowing, you're borrowing for interest, okay, whatever it is. But time has come when we have to review everything. So what we strongly suggest, your currency, you devalue it. No more market girgit and all for you. You devalue your currency. Because your rate, demand-wise, is more for me. So, as against me, you devalue. Okay. Now, this is something which, by doing it, we could have conveniently proceeded. In fact, the exporters would have been extremely happy because they would have got more now. But the point is, that way lies madness. Many of the Far Eastern countries, Central African countries have went that way, and their currencies are now worthless. I'm not joking. So when you travel internationally, you understand. You see, Indonesia with high inflation, currency is highly inflated. So if when I went to Indonesia and I just gave $100, the lady, the money changing lady, was looking at me. $100, if she gives me in Indonesian rupiah, I'll need a suitcase to carry it home. So then my brother-in-law and I, we realized that we are making a mistake. So thereafter, we started giving $10. I got 10,000 rupee notes. I used to take it out and spend it. Privatization. This is an economic law because there is a lot of economics in it. It has an economic background. If you understand the economic background, the law becomes easier to understand. As you by now, some of you are back. Like Sudhir is back, Bonnie Joss, some of my names, and he is welcoming me back. Yeah. So most of you know that I always believe that instead of teaching the subject blindly, we have to understand the concept behind the subject first. That here the concept behind the subject is very simple. India moved to globalization. India opened up the economy. Mainly, we said currency-wise, we will open up the current account. What is the current account? These two, what shall I say, the export-import. This is current account, trade, international trade, buying and selling, importing and exporting. This is current account. So any payment as part of export, receiving as import, when you are buying from abroad, they said freely. An Indian can acquire currency for current account transaction freely. That left you with the other two. So which meant what? Once India started putting in place a more liberalized framework, LPG, etc. Suddenly, FDI started coming. The city where I'm sitting now in became what was called as the Detroit of India. And not only Chennai, Pune is also an important hub of automobile industry. Every other industry started developing, and we started getting foreign. Now what happened? My foreign exchange reserves started going up. We started having more foreign exchange than we needed. See, when Manmohan went to International Monetary Fund, India had only dollar reserve for making 3 days payment. The next 3 days commitment of import was available with us. Beyond that, God only knows what will happen. But once the LPG framework kicked in, then suddenly we found, and the IMF gave us that time, 3 years time, to improve GDP, to reduce inflation marginally, not extremely, but control inflation, and put in place an LPG framework. We did that. And automatically, we encouraged foreign companies to come in through a liberalized FTA. This happened through FEMA. This liberalization process of foreign exchange happened through FEMA. Now what happened? Now, because of this, we started getting more and more foreign exchange. So we had no need for it. So what will I do with it? See, keeping dollar idle also makes no sense. So I have to invest it. So instead of Indian government investing back, we said, let our entrepreneurs go abroad. Let them go for wholly owned subsidiary abroad. Luckily, at that time, the software IT industry became very powerful. And they needed money to set up marketing offices abroad and, development centers abroad and all. So this was given to them. Others also went. Many companies went. Tata went, acquired Jaguar Land Rover. Am I correct? Airtel went, acquired Zain. So we started acquiring foreign companies. And Indian transnationals and conglomerates emerged. All this happened during that glorious 90s and 2007. Then, of course, the global financial meltdown, blah, blah, blah. I mean, possibly for many of you, this is ancient history. But as I always keep saying, my dear friends, if you do not study history, you are doomed to repeat it. Therefore, here is a small history of economic history. Last 2 decades ka economic history, which brought us to where we are now, to the so-called FEMA, right? So now you understand why the foreign exchange is so important, right? Now let's move to the act itself, the mundane act, section by section or whatever, not exactly section by section, logically. Some important definitions are to be understood. Currency, postal notes, postal orders, money orders, checks, etc., etc., etc. Okay? Right? That is currency. Piece of paper with, it is a currency note. Okay? Now, foreign currency. Any method by which I can make a payment is a currency. See, we are all used to the paper currency that we have, the Indian currency that we have. And now the word Indian currency is defined. Indian currency means currency which is expressed or drawn in Indian rupees, but does not include special banknotes and special 1 rupee notes issued under Section 28A of the Reserve Bank of India Act. Special banknotes are out now. That was in the British period, now out. That was there for a short while, now out. Special 1 rupee notes. I doubt if you even have, anybody has even seen the 1 rupee note. I have a few of them in my collection. Very difficult to get today. Very small note. The difference between the 1 rupee note and the other notes is that you take any other note other than the 1 rupee note, and you will find that on the face of it, somewhere on the right side of our father of the nation, you will find the words, I promise to pay the bearer the sum of 500 rupees. But this is not 500 rupee note then. This is a promise to pay. Who has promised me? The governor of the Reserve Bank of India has made a promise. So basically, currency is nothing but a promise by the government of that country to honor it. And because people believe in money, because people believe in the government, the currency has its strength. This is also a very important factor in understanding foreign exchange. So Indian currency is that way a very fairly stable currency. The Indian government is fairly solvent as compared to possibly a Central African country or a Far Eastern country where, where tin pot dictators are ruling. We really don't know whether they are stable. So the currency may not be very strong. That way Indian currency is very strong. Which brings us to a bigger point. Indian currency means currency which is expressed or drawn in Indian rupees, but does not include special 1 rupee note, because special 1 rupee notes are issued by the government of India. Technically, if you give a 1 rupee note, you are supposed to get equivalent value in gold. Then that's nothing much. But then I'm saying, now, point here is, these are all promises to pay. Same thing for US dollar also. Don't think that the US dollar is that's also a promise to pay, okay, by the Chancellor. The point here is, so everywhere it is a promise to pay. Okay, any country, it's, if you are a numismatist, or a coin collector, or a currency collector, you kindly go through the currency notes that you have, and you might, you will find that all other currencies also have such promises. Now, what is a foreign currency then? Any currency other than Indian currency, right? Good. Now, so foreign currency means any currency other than Indian currency, right? Now, what is a cryptocurrency then? Is it foreign currency or Indian currency? This is a big conundrum. Even the so-called currency walas don't know the answer to this. The cryptocurrency walas don't know the answer to this because, see, it is not Indian currency. It is not Indian currency. Then is it foreign currency? No. Because if it is foreign currency, then FEMA will apply to it. The stringent rules of FEMA will apply to cryptocurrency if you say it is foreign currency. If it is currency, then it is not Indian currency. You yourself are telling cryptocurrency, so Indian currency. Then it is foreign currency. That is why they hedge around it. Nowadays, they stopped using the word cryptocurrency. Instead, they use the word digital asset. Even the Income Tax Act, when amended, called it digital asset, which means they are no better than a financial product, like a mutual fund, or like any other security. So the so-called cryptocurrency is no better than like any derivative product or a security. Strictly, they will come under the head of security. There means an instrument which is expressed in some currency. In this case, see, a Bitcoin or a Ethereum is always expressed in Indian rupees. Ethereum, per se, what will I do with it? Unless I go to the dark web. If I want to make some money out of Ethereum in this market, I have to sell it. When I sell it, I need to get my Indian currency out. So it is always expressed in some other currency, US dollar. So it is a security only. It is not a currency. That is my humble view. Because the minute you say it's a currency, you will get into this trap. And then the Indian government will put a big control on that. So they ensure that they don't call it a currency. It will not be called a currency. You will rarely find them using the word. Maybe to misinterpret, they might use it in some advertisements and all. But when you actually go there and get into a contract or a thing, you will find that you are not buying a currency. You are buying any other instrument with all the concomitant risks. See, because the minute I keep a currency with me, it is totally risk-free because it has an ultimate government guarantee. If I'm holding Indian currency with me, money with me, it's 100% safe. Because if I return it, the Reserve Bank of India has to pay me. Right? Now, that guarantee, I don't think cryptocurrencies have. That is called fiat money. Fiat money means money issued by a government, a duly elected government or a duly appointed government. Excellent. Now, foreign currency, okay. Foreign exchange is a bigger term. Foreign exchange means foreign currency. So foreign currency is also foreign exchange. Beyond that, it also includes deposits, credits, and balances payable in any foreign currency. Friend, suppose you have imported goods from, let us say, Canada. You have to pay in Canadian dollars, right? So that balance is payable in a foreign currency, right? That is a foreign exchange. Deposits with bank in foreign currency, foreign exchange. Okay. LC, foreign exchange. You can see that. Drafts, travelers checks, letters of credit, payable in any foreign currency. It is foreign exchange. Similarly, any letter of credit, bill, etc., which is payable outside India, but payable in Indian currency. There are a few countries where we pay in Indian currency, but the payment has to be done, though it is payable in Indian currency, it is foreign exchange. But in most cases, we will have to pay in foreign currency. Okay, most dues to persons outside India are in foreign currency only. Now, I am a resident of India. Now, I am telling you in future correctly. We'll see that in section 3, that is clearly prohibited. We'll see that. Okay. Security definition is given. I don't want to waste your time with going through it, except to show you that this is the similar to definition given in the Securities Contracts Regulation Act. It's slightly modified, but you don't have that SCRA with you. So, therefore, quickly, security means shares, stocks, bonds, and debentures. Government securities, which is issued by the government. Deposits, receipts in respect of deposit of securities. Units of the Unit Trust of India, to my knowledge, nobody is having any of them, or of any mutual fund. And other certificates of title to securities. It does not include negotiable instruments, bill of exchange, promissory note, other than government promissory note. What is one example of government promissory note? Your currency, which may be notified by the RBI for this purpose. Now, foreign security means security in the form of shares, stocks, bonds, debentures, or any other instrument denominated or expressed in foreign currency, and includes securities expressed in foreign currency, but where redemption or any form of such return, such as interest dividend, is payable in Indian currency. But so long as those securities are denominated or expressed in foreign currency, it is a foreign security. Simple example is what we call global depository receipt. So you are an Indian company, you want to access funds from abroad, then under the FDI norms, foreign direct investment norms, you are entitled to go for a GDR or shall we say, global depository receipt. So you might go to America, find a banker who will, a syndicated banker, who would come to you and who will guarantee your global GDR issue. Then he will take it up and he will act as a kind of a depository, and he will then issue it to the citizens of the US, collect the money from them, hand it over to you, and he will stand, technically he will stand guarantee for payment of interest every 6 months and repayment of the principal. So this is how GDRs are issued. They are denominated in foreign currency. Suppose they are denominated in US dollar, they are called Yankee bonds. Where they are denominated in Japanese yen, okay, they are called, or rather Chinese currency, they are called dragon bond. So on and so forth. Okay, depends on. If they are in euro, then they are called euro bond. Okay, European currency. Now it's a common currency for the whole of Europe except UK, which is called euro. And so if it's expressed in euro, then they call it euro bond, whatever it is, right? See, why are we going through all these definitions, friends? Because every one of these items is controlled by FEMA. If you want to issue foreign security, FEMA. If you want to hold or buy or sell foreign exchange, FEMA. If you want to hold foreign currency, FEMA. There are rules for every one of these activities. The minute you say foreign exchange, it's FEMA. Okay, without understanding FEMA, you cannot go there. Person is also defined here because we are going to define person resident in India. Okay, therefore, person is also defined here. Individual, HUF, a company, firm, association of person, artificial juridical person. We saw all this in Income Tax Act. Last item, 7th item, I would humbly suggest needs your patient perusal. So kindly think any agency, office, or branch owned or controlled by such person also is a person. Later on, we'll be seeing definition of PROI, wherein we might find any agency, office, or branch owned or controlled by such person becomes relevant. Okay. Now, this is the definition of PRII, person resident in India. I'll be using this abbreviation, so kindly, when I say PRII, person resident in India, means I'm giving the definition, friends, the complete definition. Then I will take you through a flow chart with which I will try to explain it to you in more detail. PRIA, very important. Frequently tested area. So in case all my, economic history lesson and all the other currency exchange and all, you started slightly going to sleep, please wake up and listen, because this is important. Person resident in India definition is very important. Okay. So person resident in India means residing in India for more than 182 days. So midnight 182 day, no problem. 000001, more than 182 days, then out. During the course of the preceding financial year. So just like income tax, how do you decide residence for an assessment year? You take based on the stay during the residence during the previous year. Similarly, you have to see his behavior more than 182 days during the course of the preceding financial year. So bottom line, my dear friends, if a guy has stayed in India for more than 182 days, straight away PRIA, with two exceptions. So there are two possibilities here. A guy could have stayed for more than 182 days. A guy might not have stayed for 182 days. So two categories they're excluding. One is a person who has gone out of India or who stays outside India. Okay. For or on taking up employment outside India, or for carrying on outside India a business or vocation outside India, or for any other purpose. In such circumstances, as would indicate this intention to so taking up employment outside India, very clear. Now you get a job abroad, wow, that's it, enjoy. Canada, I'm going to go, that's it, forget India, bye. So taking up employment outside, please, business outside India, or for any other purpose in such circumstances. I'm not able to think of anything, but maybe see, you are taking a long visa and going there to be, see, this will be there applicable for elderly people who will go abroad where they may not be clear. They might stay, I might want to settle down. They are uncertain period. They don't know when they want to come back. They might be having a 10-year open visa. So they don't know when they, so whatever it is, stay only for a certain period. This is done through visa regulations. So the intention may be there. Anyway, now, what happens where a person has gone out of India during the current financial year, even though he might have stayed in India for more than 182 days during the preceding financial year. If he has gone out of India or stays outside India for during this year, okay, for one of the three purposes, I call it three purposes. If he is staying for one of the three purposes, then then he would be a person resident outside India. We will see that in the flow chart, you will understand. So even though he has stayed for more than 180 days during the preceding financial year, he would be a person resident outside India. Now, a person who has come to or stays in India. Now, here's a guy lady who is coming to India for or on taking up employment, for carrying on in India a business or vocation, for any other purpose. In such circumstances, as would indicate, is stay in India for an uncertain period, where the period is uncertain, but he wants to stay. Okay, where the visa is clear and they want to go away, no problem. It's an uncertain period, then covered. Okay. See, the C is an open rider class. Okay, for people who are coming without any purpose, we want to know what is your goal. So one man may say, I have come here to, for becoming a disciple of Swamiji, and I will be here only. I have forgotten America. I want to be here. Okay. No. So something like that. So who comes to India? Now this is, see here, there are two views. When I go through the flow chart, I will give the prevailing view, shall we say official view. I will also give you my view, but I will give the prevailing view, which is applicable for the exam. So I will be honorable and honest with you. Then as a professional, I'll give my view also. which you can take as an additional input. But from the exam point of view, I'll give you the correct viewpoint. That is how the institute has interpreted it, which is how we have to understand it also. Okay. But my view is that, see, as a professional, we can all have views, right? So, because according to me, residing in India for more than 182 days is a kind of a threshold. Okay. So, that is threshold. But then that verb says, but does not include. So, this 182 days criteria is exempted for these two people. Okay. Even though he might have stayed, he would be a PROI. Even though he might not have stayed, he might become a PRIA. That is the view. Even if it's less than 182 days, if he has come to India for one of the three purposes, they say he is a PRIA. This is something I'm not very, comfortable with. But then, that's okay. Then, this is about natural persons. Now, artificial person. Any person or body corporate, registered or incorporated in India. So, includes a firm also. Na? Person includes, we saw the person. Person. Firm also is a person. So long as registered or incorporated in India. So, company incorporated in India, PRIA. Don't worry about, see, by now you might have studied foreign company. I hope so. By now, under the Companies Act definition. You have companies incorporated outside India, one definition. Then you have foreign company, another definition based on shareholding and all that. Point I'm making is, once you come to FEMA, that is not considered as. Simple question. Were you incorporated in India? PRIA. Were you incorporated outside India? PROA. Straight away. No problem. Now, an office, branch or agency in India owned or controlled by a person resident outside India. Now, that is why we said office or agency is also a person. An agency, office or branch. So, there is a branch of a company incorporated outside India that is owned by a company outside India. That is a PRII. Even though it is owned or controlled by a PROI, if the branch or agency or office is in India, it is a PRII. You're seeing the definition of PRIA. Now, reverse. An office, branch or agency outside India, owned or controlled by PRIA. Suppose a person, for example, a subsidiary of a company, foreign subsidiary of an Indian company. No, not covered. Sorry. Because that comes under the second one. Na? Subsidiary would have been incorporated outside India, right? Straight away PROI. Suppose Indian company is setting up a branch in New York. I have a branch in New York. That branch is controlled by the company in India. Straight away, that branch in New York becomes a PRII. Right? So, this is a very important definition. I will pause here. In case you have any doubts, kindly feel free to ask me. So, I'm not seeing many queries in the query pad, which is good and bad. Bad because I love queries and answering them. That also gives me a sense of interaction with the students. Now, let us understand. See, regarding the other people, I think it is all pretty clear. But this individual is a highly vexed area. Let me try to help you again. Person who resides in India for more than 182 days, straight away, Ganya, he is a person resident in India. There's no way he is going to escape, except if he leaves India or stays outside India for three purposes. Right? Now, even if you stay in India is more than 182 days during the preceding financial year or even during the current financial year, he will still be PROI if he leaves for one of the three purposes during the current financial year. On the other hand, person who comes to India for the three purposes mentioned above becomes a resident whether his stay exceeds 182 days or not. So even if he stayed for less than 182 days, he would be a PRII. Okay. Now, a person who comes to India in a financial year as a tourist or for other reasons where his stay is for a period which is certain will not be considered as resident even if his stay in India is more than 182 days. This is a special exemption for tourists. See, Robert comes to India and he wants to become a devotee of Swamiji, some Swamiji X. And so the Swamiji tells him, Robert, how much money have you got with you? Swamiji, I've got $10,000. Give it to me. First, give up your property, give up everything, take off all your clothes. This is the langot, wear it, and grow your hair, sit quietly, meditate, enjoy, experience the bliss while I'll enjoy your $10,000. So, okay. Now, Robert does it for some time. He starts, nothing happens, except that India is very hot. He sweats a lot, and food is spicy. No toilet paper in the toilet. So, he is absolutely disgusted. Luckily for him, he's got only tourist visa for 90 days. So, he decides to stay another 90 days. Another 90 days. Okay. So, it touches 180. Then he stays another 5 days. 185 days. But how did he come? Now, 185th day, fellow is sitting in the hot sun thinking, what am I doing here? I should be in Los Angeles, sitting in a bar, drinking a cold glass of beer. What am I doing here? So suddenly, Robert actually has a realization. Robert actually has a spiritual realization, and he decides, go to hell, and he takes a flight back to Los Angeles, starts living his life normally. Now, is he a person resident? No. Our problem is not with the spiritual awakening of Mr. Robert, but whether he is a PRIA or PROI. No. According to this, he is a PROI because he came as a tourist. Even though his stay in India is more than 182 days, he is still a person resident outside India. Same thing will happen for a student. When a student goes outside India, even though he would not have stayed in India for more than 182 days, still he would continue to be a PRIA. So long as he's a student, the minute he takes up a job, he gets a employment visa. That's it. That year he would become because he would not have stayed for more than 182 days, right? So he will become a PROI. Till then, he will continue to be a PRIA. This is for a student. Okay? Pure student. Because student doesn't come under one of the three purposes, right? Tourist does not come under one of the three purposes because a tourist comes for a very, very certain period. He knows when he is going to go back, even though, see, most Americans and Europeans can extend their visa. Especially Americans can always extend their visa wherever they go in the world. So they can come. But then, still, there's this certainty there. Good. So, I will still trouble you with a flowchart, and then the problems. Person resident outside India means a person who is not resident in India. So if he is not PRIA, straight away he is a PROI. Typical negative definition. Public company is one which is not a private company, blah, blah, like that. So PROI means a person who is not a PRIA. Now, citizenship is not relevant for determining residential status under FEMA. Friends, stay is what is determining. Citizenship has nothing to do with residential status under FEMA. Unlike Income Tax Act, where you have something called resident and ordinarily resident and all, here there is nothing. You are either a PRIA or a PROI for that year. So, where a person comes to India for one of the three purposes, he will be considered a PRIA from the date of arrival in India. Got it? It's very important. He is coming to India for taking up employment. Now, let us say that he is coming in March. Now, he will be a PRIA from 1-3. For 1 month, he will be PRIA. Up to that, he is a PROI. You got it? So, from the date of arrival, he will be taken as a PRIA. So, very important point you have to understand. From the date he comes to India, he will be a PRIA. This is taken based on the stay during the current year. You are not bothered about what happened in the previous year because he has come to India for one of the three purposes. Then even if he is not stayed for more than 182 days, stayed away, he is a PRIA. From which date? From the date he arrived in India, not from 1-4. I think this clarity is very important. Okay. Friends, I would love some comment or some query on the query pad. There's nothing. After Bonnie Joseph's welcoming, there's nothing there. So give me a sign that somebody is out there listening to me. Now we come to questions. What happened to my... Okay, good. Okay. Now, just give me 1 minute to... Right. I don't know how it got hidden. I don't know when it got hidden. Let me unhide it. I will take you through these two. Anyway, you can see these two slides, I hope. Yeah. See, this is the problem. I don't know what has happened. Some usual Microsoft issue. This slide got hidden. I don't know how it got hidden. So this is the slide. You want to take anyway, I'll be sharing it as usual. But if you want to take a photo of something, take it. Point here is, I've tried my best to analyze it as a flowchart. Ideally, I would love to have it on the same sheet where I will have residence in India greater than 182 days, no, would come on one side, and residence in India greater than 180 days, yes, would come on another side. So, but since I don't have the type of space in this presentation and I want to make it somewhat clear, bigger size, I'm giving it in two sheets. So first is, you ask the question in the flowchart format. Residence in India greater than 182 days. The correct answer is, there should also be one more thing, during the preceding financial year. No. So he says, no, I didn't stay in India beyond 180 days during the preceding financial year. Did you come to India during the current year? Did you come to India? That is why, here, the number of days stay in India doesn't matter in the current year. He came in May, he came in March. May 22 or March 23, it doesn't matter. Question, did you come to India? Say, no, I didn't come to India. So, I was not residing in India for more than 182 days. I did not come to India. Okay. Sunak, the Prime Minister of UK, would maybe satisfy this criteria. Am I correct? And, or maybe Joe Biden. They have not come. They have not resided in India for more than 182 days. Not come to India also. No, straight away PRY. Straight away. Now, suppose the guy says, yeah, I came to India. Okay, then the question. Did you come for one of the three purposes? So he says, yes, I didn't stay in India for more than 182 days, but during the current year, I came to India. Yes. So if he says yes, then you ask him, was it for one of the three purposes? What are the three purposes? For or on taking up employment, for carrying on any business or profession, or for any other purpose where the stay in India would be for an uncertain period of time. See, don't worry, in the exam, they would clearly give you uncertain period of time and all. If it is so, you will have enough information for that. Now, so, did he come to India? Yes. For the three purposes? Yes. Then even though he has not stayed in India, resided in India greater than 182 days, he is a PRII. Okay, he says, no, not for three purposes. Robert is a classic example. Now, he came as a tourist, certain period. Becoming a Swamiji or becoming a disciple of a Swamiji is not taking up employment. Maybe it could be business, but that's only for Swamiji, not for Robert. So, nothing, no, not for three purposes. Then he is a person resident outside India. Okay. So, this is one limb. Clear? Now the other limb. Now the other limb, which is, you ask the question again to this gentleman regarding stay. Did you reside in India for greater than 182 days? Now he says, yes, yes, yes. Okay. Yeah, I stayed for more than 182 days. Oh my God, what happens now? Wait a minute. Did you leave India during the current year? Yeah, I did. When did you leave? Yeah, I left in January. Okay. Was it for one of the three purposes? Yeah, three purposes. For example, employment. Most of more, 98%, 85% of the time employment. See, a man may travel abroad and come back. Are you able to understand? For example, I travel a lot as a leisure traveler, but not for employment or for even business. Not even in the course of my business. Not even in the course of my profession. I go as a leisure traveler. Not a three purposes. Okay. Certain visa is there. They'll kick me out after 5 days or 10 days. They'll kick me out. I have to come out of that country, come back to my Mera Bharat Mahan. So the point I'm trying to make is, was it for three purposes? No. Then you are a PRIA. Was it for three purposes? Yes. I've gone to Canada to take up employment. You are, even though you stayed in India for more than 182 days during the previous year, during the current year, if you have left India for taking up employment, you are a PROI. Okay, I never went out of India for more than 182 days. I was residing in India for more than 182 days. I did not leave India. Straight away, waterfall, PRIA. So this is to help you to understand this better. Thank you, Sudhir, following your lecture. I'm so happy for that. Okay. Now, Aniket Jain has a question. Let's see what that is. If person from foreign come for three purpose, from day one, he is PRIA. Yes, you are right. Your understanding is absolutely correct. Exactly. You are very, very, very correct. That is, you are saying, suppose he has come for on 1st April, then straight away he's. Even if he comes on 31st March, PRIA. Got it? And this fellow, if he leaves on 31st March, he is a PROI. Provided it is for one of the three purposes. Right? So now, with this background, let us, in fact, this PowerPoint, this particular, what shall I say, this flowchart has been vexed because of this unfortunate dividing the two. Now I have corrected it, and what I'm giving you is the. Now you might ask me, sir, how about a person who stays in India for more than 182 days and has come to India? Because here we say residence in India greater than 100 days. Did he come to India? No. So if he says yes, are you able to understand? He wouldn't go here at all. You ask him this question: did you reside in India greater than 182 days? Yeah, yes. Then straight away you don't have to go to that come to India question at all. Go to did you leave India? No. Then straight away PRIA. Straight away that fellow will become PRIA. Coming to India may not. Because if he stayed for more than 100 days, only exception tourist. Only exception tourist. You got it? Only exception tourist. If you stay in India for more than 182 days, you didn't come for boss. You are hiding from some other country and staying in my country more than 182 days. You are not coming for employment business, but you have stayed for more than 182 days, right? Sorry, you are a person resident in India. Even if he stays more than 180 days, so be careful, only for tourists. Right. Now, here are some problems that you might want to look at. I have not given any answer. I will explain the answers. Let us see. Mr. Ram had resided in India during the financial year 2018-19. See, recently it was tested in the exam second time. This is a repeat question. It has been repeated many times. If you see the practice manual, you will see its ugly face many times. Let's take the principle here and we'll understand it. Ram had resided in India during financial year 1819 for less than 183 days. 1819, less than 183 days. He again came to India on 1st May 2019 for higher studies and business and stayed up to 15th July 2020. What is his residential status? 1920 and 2021. So Ram had resided in India during the financial year 1819 for less than 183 days. Correct. Technically, he should be PROI because less than 183. But we have to ask him the question, what is that? Did you come to India? Yes. Was it for one of the three purposes? Now, higher studies, no. But business, yes. So he came to India to take up business. And he stayed. Doesn't matter. The minute you say he came during the year, 1st May, on 1st May onwards, he will become. Up to 1st May, there is 1-4 to 30th April, he will be PROI. 1st May onwards, he will become PRII. This is the conclusion. How about 2021? Now, 2021, he is still in India. See, he is there till 15th July 2020. So there, I have to count the number of days stay in the previous financial year. You got it? So that we have to see whether he has stayed. He has stayed for more than 183 days. Therefore, he is a PRII for 2021. Now, we are having data only up to 15th July 2020. Suppose you tell me on 1st of March, he left India for taking up employment abroad. Then I will tell you, hey, up to 30th, 31st, 28th, 2020, 2021. So 28th of February, he would be a PRII. The minute he leaves the Indian country for employment, then he will become PROI. So the date will become very, very important. Which is why whenever a client comes to me for any consultation and they say the talk turns to non-residents, the minute they come, they'll say, Mr. Srikanth, I'm not a resident of India. Chalo, whether you are a resident or not, I will decide. For that, I need your passport. So I tell him your passport for the last 2 years, you give it to me with all the stamps and all that, visa stamps and all that. I want it, not just the first, second page. Entire passport, I want a copy. Sign and give it to me. Then I will decide whether you are under FEMA, I will decide your residential status. Under income tax, I will decide your residential status. Everything I will decide based on data, not on what you say. Similarly, many people will come and tell me, sir, I am OCI. Right? You are OCI, overseas citizen of India, we salute you. But whether you are resident or not, let me decide and tell you. Because it will differ under income tax, it will differ for, FEMA. So, give me the data, I will tell you. What the correct answer I have to give. Many people will come to you and say, I am a non-resident, therefore no income tax. That's all, straight away. Mr. Srikanth, I am a non-resident. So no income tax for me in India, right? Sir, I cannot tell anything. Please give me your data. Then I will tell what is your income sources, what type of income you are earning, what is your India. Your Indian income will be taxed, sir. Even if you are a non-resident, your income earned in India will be taxed. No, I'm a non-resident. Like, see, these are all ignorant people. So it is our duty to educate them and tell them this is how the law is, like that. And of course, we should do it very politely and humbly so that they don't get offended. Otherwise, you will lose a client here. Second, Mr. Kishan resided in India during the financial year 2018-19. Agreed. He left India on 1st August 2019 for the United States of America for pursuing higher studies for 3 years. What would be his residential status? We already saw that now. He resided in India 18-19. So, 1920, he is 100% PRII. Why? Because student is not one of the three purposes. So, only preceding year we have to see. Preceding year he resided in India. Therefore, 1920. 2021 also. Why? Because going abroad for studies is not one of the three purposes. Right? So, it will be not taken as he will continue to be a PRII. That's the conclusion. Then we come to Miss Alia. Okay. Miss Alia is an air hostess with the British Airways. She flies for 12 days. I mean, she flies in a plane. She doesn't have wings. She doesn't fly. The the plane flies and she travels in it as an air hostess for 12 days in a month. And thereafter takes a break for 18 days. Wow, what a life, yeah. I wasted my time studying CA. Should have become an air hostess, whatever. Anyway, hopefully not in Jet Airways. No? Okay, let's take the questions later. I'm happy for questions are coming up. So happy. Good. So Miss Elia is the point is very simple. During the break, she is accommodated in a base, which is normally the city where the airways are headquartered. So she was based in Mumbai. So she is employed in British Airways, London. She was staying in Mumbai 18 days in a month. Yeah, you calculate. It's more than 182 days. Okay. So what is her residential status? Now the answer is she is still a PROI because she has not come to India for on taking up any employment. See, what is the threshold point? Person should have resided in India for more than 182 days. She merely stayed in India as part of her duties. She continues to be a PROI and a citizen of a resident of, whether she is a resident of UK, I don't know. But 100% she is a PROI for India. Got it? So let's look at some of these questions. If a person comes in 31st March of previous year and stay in India 30 days, then he PRI current as well as PY. Let us look at it. If a person come in 31st March of previous year, okay, and stayed in India. So for the previous, I cannot tell you about his residential status for the current year. But for the previous year, he came on 31st March. Now, again, for what purpose did he come? I do not know. So if you can tell all that, if he came for the three purposes, then 31st March he came. Last year is PRIA. Current year, he'll be PROI because current year he has not come. He came in the last year. So current year I have to go by previous year. Preceding financial year. Preceding financial year, by your own point, he is not stayed for more than 182 days. Therefore, PROI. So very peculiar. Year of coming, PRIA. Next year, PROI. But that is why I'm saying data insufficient because you are saying he stayed for only 30 days. He is gone again. Then technically he will be PROI for the next year. Right? Because he didn't stay. The year after that also he will be PROI. That 1 year. Again, my dear friend, what type of person is it? I mean, your question itself is a little weak now. He comes on 31st March. For what? That you have to clarify, Shailendra. I am assuming that it is not for the three purposes. Then, straight away, previous year, current year, next year, he will be a PROI. But if it is for one of the three purposes, and he came on 31st March, again left 30 days later, I am not able to see how he would stay only for 30 days to carry on, to become an employee. So, not able to see that. Maybe he resigned, joined 15 days, got angry, went. Agreed. If that is the case, then peculiar. That year will be PRIA. That too for only 1 day. 31st March alone, he'll be PRIA. Then on 1st April onwards, he'll again become PROI. By definition of preceding financial year. You have given a very peculiar case. But I hope I have given an answer satisfactory to you. Person comes to India for any of these three purposes for 1 day. Yeah, I gave the explanation. Na? Same explanation I gave to Shailendra's question will be for you. In the current year, current financial year, or will he be PRA in the next? See, that's exactly the same question as Shailendra. In fact, you have given me slightly more data. You have said one of the three purposes, 1 day. Boss, how can he come to India for any of the three purposes for 1 day? See, question is interesting, answer is given, but practically not possible. Is that a better idea? So, kindly, whenever I give an answer and you are satisfied, say you are satisfied. If you are not, then say why. Then we will take it. By business, does it mean that one must have a registered business abroad? Yeah, some business should be there. You should carry on your business there. So, yes, there should be some business activity. Intention should be to carry on a business activity and go there. Okay. So, this is the... Lastly, you have this print text computer. which is a typical repeat question. I've seen it repeated many times. Printex Computer is a Singapore-based company having several business units all over the world. It has a unit for manufacturing computer printouts, printers, with its headquarters in Pune. So, Singapore-based company has a Pune unit. It has a branch in Dubai which is controlled by the Pune headquarters. Got it? It has a unit, not a subsidiary, because if it is a company incorporated in India, straight away it is a person resident in India. It is not a company. Singapore-based foreign company has a unit for manufacturing computer printouts in India with Pune. Right? That company has a branch in Dubai, Singapore-based company, which is by the headquarters in Pune. What would be the residential status of the printer manufacturing of Pune and Dubai branch? See, Pune in India, controlled by a PRY, is a PRIA. We know that. Now, Dubai branch is outside India, but controlled by Pune. Pune is a PRIA. Therefore, foreign branch controlled by a PRIA is also PRIA. Got it? PRY branch in unit in India. Okay? Then that unit is PRIA. Now that unit in India is controlling Dubai. Therefore, Dubai branch also becomes PRIA. Again, it's an interesting question. You may want to think about it. Okay, moving on. Dealing in foreign exchange. 3. Now, 3 is the operative section of FEMA. 3 is the prohibitory section. In fact, I would say 3 is the crux of FEMA. 3 is the statutory provision, which says, save as otherwise provided in this act, rules or regulations made thereunder, or with the general or special permission of the Reserve Bank. So, either it should be provided in the act, or the rules, or the regulations. We'll be seeing all of that. There are many rules, the act itself is giving. Or with the general or special permission of the RBI. So if it is not mentioned anywhere in the regulations, rules, etc., you can always go to the Reserve Bank and create a special case. See, earlier, they had stringent rules on receiving payments. Now, one of my clients was exporting goods manufactured in Nepal. They were manufacturing in Nepal, built from India to USA. Now, the Nepal guy had to be paid. So we wanted some portion of the money to go directly to the Nepal guy. So we got, that is absolutely not possible under the current regulation. So we went on a special application to the RBI. It was about 15 years ago. I think it was under FERA. Then also the same section 3 was there in FERA also. So we went to the Reserve Bank of India on a special permission and we got a special approval that so long as we reconcile it totally. See, with it, we exported, okay, bill sent out of India, the entire money has to come to India. But we got a special approval from RBI saying portion of that money could go to directly to the Nepal guy. Because otherwise, I have to get the money, pay him. So this was easier. Payment went there directly and he could go on with his business. And he will adjust my account, I will adjust his account and all. That is not a problem. Accounting wise, it was all pakka. So finally, the whole invoice would be tallied. Suppose I had sent a bill, I will tally it. The banker, I tallied it. Every pie will be tallied. If I am supposed to receive $4,000, he would have got 3,500. I would have got 500, and that 500 would be accounted here. 3,000 would be accounted there. Whatever. Okay. Special case, we can get a permission. But other than that, you have to deal in or transfer any foreign exchange or foreign security to any person not being an authorized person. No person shall deal in or transfer any foreign exchange or foreign security to any person not being an authorized person. Now, do you understand what I said? Suppose I'm an Indian resident and I say, hey, in future, if you want to consult me, you have to pay me in dollars. Sorry, you cannot pay that because you would be violating section 3. You cannot deal or transfer any foreign exchange to me. I'm not an authorized person. You can only do it through an authorized person, through the bank. Make any payment to or for the credit of any person resident outside India in any manner. Okay. Receive otherwise than through an authorized person any payment by order or on behalf of any person resident outside India. If you want to receive any payment, it has to come through an authorized person. If you want to make any payment, it has to go through an authorized person. Directly, you cannot make any payment in foreign exchange, including foreign currency. Foreign exchange includes foreign currency or foreign security. You cannot transfer a foreign security. For example, if you are having a foreign share, you are having a foreigner coming to India, you can say, please buy my share, take all the shares, give me money. This transaction, basically it's a capital account transaction. It is approved in the FDI rules, but it needs not approval, it needs information to the Reserve Bank through the authorized dealer. Everywhere you will find anything you want to do in FEMA, you have to do it only through an authorized person. Got it? Authorized persons are very, very important. In fact, the Reserve Bank of India has delegated about 60% of its power to the authorized person. Earlier, what was controlled by the RBI Exchange Control Division, today is now managed by the authorized persons. Their responsibility is more. There is also stringent control on them. Okay. Also, you cannot enter into any financial transaction in India as consideration for or in association with acquisition or creation or transfer of a right to acquire any asset outside India by any person. Means, for example, you are buying gold outside India. No payment is given, you take the gold and come. Here, payment is given. To that extent, here in cash, payment is given. Boss, this is called hawala, smuggling. Gold is coming into India, payment is made here. Okay, so the criminal offense. Later on, you are not having that law. It is called COFE POSA, Conservation of Foreign Exchange and Prevention of Smuggling Activities Act. That COFE POSA was mentioned by me when I taught you Schedule 5. When I taught you one of the acts on which a director should not get COFE POSA, where a person is found in possession of foreign exchange or bullion, gold, or currency. Okay, any currency, without any proof. What is this? I don't know. Simply it was lying on the ground in Singapore. I picked it up and I brought it to India. Not a valid explanation. Okay, so in those cases, you have to straight away, no questions asked, detention 48 hours, then charge sheet. Then 48 hours later, you can come out on bail. 48 hours unconditionally, they can detain you, provided it's found in possession. Because one more I have left out. Bullion, foreign exchange, foreign currency, foreign exchange, narcotics. Of course, gold and foreign exchange, chalega. Narcotics, gone. You're out. So that is very stiff. See, this law is closely associated with that. That is why this law is today administered by what is known as the Enforcement Directorate. Earlier, it was directly the Reserve Bank of India was controlling it through the Exchange Control Department. Now, Enforcement Directorate is there. So, any offense under FEMA, straight away you go to ED. The RBI doesn't even talk to you. RBI doesn't bother. Whether you are an authorized dealer or whether you are an exporter or importer, you go to the ED. And the ED only. And ED is like straight away CBI. The manner of inquiry itself is like a CBI inquiry, not like our good friends in the income tax department where they give you notice, you go there, you talk to them, have a cup of tea, you explain the matter. Nothing. Start off as if you are a criminal and then you start talking. And they keep asking you questions as if you have done an extraordinary crime. Okay, that's the point. So that's why in future, whenever you are dealing in foreign exchange, if your company is dealing in foreign exchange, be very, very clear. Accountability should be 100%. Every dollar that comes in should be accounted. Every dollar going out should be accounted. Okay. Then you have no problem at all. Transparency. Everything is clear. Chalo. Then nobody can ask anything. Okay. 4 is about holding of foreign exchange. Indian residents cannot hold, they cannot acquire, hold, own, possess or transfer any foreign exchange, foreign security or immovable property abroad. That is, you cannot hold immovable property abroad. See, Indian residents can hold property in India, but you cannot hold immovable property abroad, right? And you cannot acquire foreign exchange or foreign security, etc. The principle operating is very simple, my dear friends. The conceptual principle operating is the funds belong to the person, but the forex belongs to the government of India. Friends, you are an exporter. You have exported goods to Canada or US. Now you are the creditor. The US buyer is the debtor. Now, he has to pay you the money. Now, you see, normally, if you are the creditor, you can give him time, right? It is your right. Contractually, you can say, chalo yaar, you take some time to pay. Credit period, LC pay says 45 days, 60 days, you take time. No, you have to bring back that foreign exchange within 9 months. We'll see that very stringently on export of goods. Very stringent. And if you don't do that, if they are lying open, then Indian government wants to know why. What? Because the principle operating is the funds belong to the person. That is, the converted INR value is your money. But the forex belongs to the government of India. Why? Go back to my balance of payments diagram. I have to pay US now, ultimately, for imports. So where will I get the forex from? Unless if you don't bring it in. So forex belongs to the government. The money belongs to you. Are you able to understand this concept? I hope. Forex belongs to the government of India. You cannot keep it. You cannot say, I will not take it back. That is why stringent rules are there on collection of the amount. Very important. See, hope you understand the conceptual part of this. It will be very easy for you. Also, now you understand why cryptocurrency will not try to take itself under foreign currency. Because the minute they do that, Section 4 will apply. Indian resident cannot hold foreign currency. Yeah, you can hold up to a limit. Up to $2,000 you can hold per person. In your house, you can hold up to, I got, where I'm now sitting in the dryer, I got $2,000. I can hold. Okay, I got 5 people in my house, so 5 into 2, $10,000. No problem. I can hold. But if you are beyond that, you can't hold. Okay? If you are holding, be careful. Don't tell. Okay. No. So, sir, okay. So this is Section 4. Now we move on to another very important principle, current account transaction, capital account transaction. In the meantime, Bonnie Jose has a question. Financial transaction in India for asset acquired outside India, online payments abroad is allowed. Financial transaction in India, sir, I will come to that a little later. When I come to capital account transaction, I will explain this about buying an asset abroad. You can buy everything, friend. You can buy. Don't worry. Your villa in Europe or Italy, whichever you want to buy, Mr. Bonnie Jose, or your Shropshire cottage is definitely you can buy it. Don't worry about it. But the money has to be done only through an authorized dealer. What I assume that you by online payment, you mean payment through an authorized dealer. Allowed, but there is a limit. We'll talk about that. We'll talk about that. You can't just like that take any amount. Because when Manmohan Singh said, we will make our country open up the economy, he said, we will open up the economy, but not fully. We will open up current account fully, but capital account, no. So, current account transactions are freely permitted. Current account means what? Import, export, buying, payment, making payment. For example, I am a member of ISACA. So, as a certified information systems auditor, I have to make payment to ISACA, which is in Illinois, USA. I have to make a payment in dollar. So, I'll make it through my HSBC account, absolutely no problem, or through my international credit card, absolutely no problem, because that is current account transaction, freely permitted. I want to buy a book, I can. All is allowed. So long as the payment is permitted by my authorized dealer, I can go ahead and do it. Absolutely no problem. Okay. So, current account transactions are freely permitted unless specifically prohibited. So, in a short while, I will be taking you through list of current account transactions that are prohibited. Very, very important. You should know because current account transactions are freely permitted unless specifically prohibited. So, any item that I cover is prohibited partially or fully. But if it is not in that list, do whatever you want. Enjoy. Okay. Travel abroad. Take an international credit card. Swipe. The limit is given by your bank. Yeah. Whatever limit. But be careful. If you are traveling for business abroad, then there is a limit. That's also getting subsumed. Now you have a free hand. You can go. Bonnie Jose can buy his property abroad and pay online. No problem. There's a limit. I will tell you the limit very shortly. Don't worry. Let me hold it in suspense for you, but I will tell you. Up to that limit, enjoy. This is part of the liberalization process. But see, ultimately, my dear friend, suppose you are living in the United States of America, there is no control. You can wipe up your entire bank account and transfer it to Italy. I mean, why Italy? Anywhere, for example. So no, the US government doesn't care where you're taking it. Even you can take it to Cayman Island. They don't care. If it is part of a money laundering and the FBI catches you, that is a different problem. But taking the money out, no restriction. Simply sitting in your computer, chuck, transfer it. Go to Italy, enjoy, settle down in Italy. They don't really waste it. Whereas in India, you can't do all that nonsense. You can't simply transfer funds to Italy. No way. Your money, even though it is your money, you can't do it. You have to go through the bank. There's a separate application for that. There's a limit, all that. You have to, within that limit only, you can transfer. Okay. Earlier, it was absolutely prohibited. Now, if it is specifically permitted, you can do it. So, capital account transactions are prohibited unless specifically permitted. So, intelligent CA student, what they should know, what are those current account transactions which are prohibited? Then, what are those capital account transactions which are permitted? That is all. You will become an authority in FEMA. End of. Thereafter, you are a certified authority on FEMA. Straight away. And believe me, it's a very good. See, okay, it's not a specialization per se, but it's a nice side activity to have. Suppose you develop an expertise here, and as a practicing chartered accountant, you are having a little bit more knowledge. It's nice side consulting business that you can run. Consulting, where even other chartered accountants will consult you. Because they may not want to do this. So you take care of it. Provided you should have in and out. Boss, not just what I'm teaching in these slides. There is a ocean of FTA norms, master circulars are there. You should. That's again a specialization. But little bit if you start, once you get the basic knowledge in, then it follows. Logic is there. Okay. To my knowledge, I know about 5 leading chartered accountants in India who are authority in FEMA. Who are authority. See, I am knowledgeable. The authority is there. Slight difference. I hope you understand. Knowledgeable, I can tell you what it is, etc., etc. Authority, he knows this is how it is, that is how it is. He can tell. That is a slight difference. Okay. Good. So, financial transaction, sir, so $100 belongs to government, but 100 into 8, exactly 8,000 rupees belongs to me. Exactly, Bonnie, you are absolutely correct. So, they are saying, boss, you bring that $100 back and give it to me. I will give you 8,000 rupees straight away, or whatever the current rate, I will give it to you straight away through the authorized dealer. But you can't keep that $100 abroad without collecting. If you are not collecting it, I will come and catch you. This is the point. Okay. Similarly, when you are making payment, also they are saying you import goods, whatever is stated in the bill of entry, pay. Beyond that, if you go pay, I want to know why. Which is why we had another major problem. I'll tell you, these are all very practical. Import of goods. Okay, when I come to import, I'll tell you all this. Export, import. Again, my dear friend, all this is theoretical as you are now studying it. But if you're doing an audit as part of your articles or articleship, I'm sure you have done this. Or if you are working in a company where foreign exchange is there, this will become a very, very easy because you would have seen it happen. You would have actually seen. As part of your audit, you would be going through current account transactions. One of the audit program queries you will have is whether export bills have been collected within the due date fixed by FEMA. If any list is there, you will have to qualify. Recently, we qualified one case where they have not recovered the money in spite of them. So now we are now that's what. See, there I am aware of the subject, but I don't want to get into this whole thing. So I have asked them to hire the guy whom I would refer to as a authority, and I'll say, hey, go to this gentleman. He knows what to do. He'll go to the ED or he'll go to the RPA. He will get you a permission and please proceed with it. Something like that. Okay. So, but broadly, you have to understand how it works. Now, current account transaction not defined. Current account transaction means a transaction other than a capital account transaction. Straight away. Okay. And without generality to the foregoing, generality, that is, Any transaction which is not a capital account transaction is a current account transaction. So that is a general statement. Now, without that, without disturbing the generality of that statement, without prejudice or without contradicting the generality of the above comment, some examples of current account transaction are given in that section. You got it? These are only examples. They are not exhaustive. If there may be something which is not in this list, but which is not a capital account, it is automatically current. So, payments due in connection with foreign trade. Any payment due in connection with foreign trade, other current business, services, short-term banking, credit facilities, etc. You are buying licenses from Microsoft. You want to pay to Microsoft directly in dollar. You are buying 100 licenses, getting a discount. Fantastic. Online, you go there, Microsoft, say make the payment. Current account payment. Straight away you neft it. Nobody can ask you why. Okay. Payments due as interest on loans and as net income from investments. But be a little careful here. You might ask me, sir, you are here to teach FEMA. Why are you wasting my time talking about income tax? But I have to, because I said, you want to make a payment to Microsoft? Make it straight away. Whatever. No limit in FEMA, but income tax, there is a problem. See, this is the problem with CA or any professional course, medicine, law. You can't compartmentalize knowledge. You can't make it, sir, this is FEMA, sir. Please don't talk about income tax. Sir, that is income tax, sir. Sir, please don't talk about FEMA. Sir, this is FEMA and income tax, sir. Sir, please don't talk about company law. Sir, please don't talk about security law. Friend, I can't do that. If I have to be a successful chartered accountant, I should see the implication from 360 degree everywhere. Now, do you understand why CA exam is tough? Luckily, they don't test you on the 360 degree awareness. They only test you silo. For example, in the exam, you will get only FEMA question. But in real life, when a problem lands on my table, it is not a FEMA problem. It is not an income tax problem. It is a problem. I have to analyze it and I have to give the client a total solution. I can't give the client a FEMA solution and say, sir, I'm only a FEMA man. You go there. I can't make him run. I should give him an overall total solution. And then I can say, hey, this part, I will handle. This part, I will give it to him. Who will take it up? Execution, I can push. But principle, giving solution is my job. This may sound a little irrelevant and beyond the scope of my lecturing, but take it as a larger input from a senior chartered accountant with 35 years experience in a variegated practice across corporate, right from 2,000 crore company to 2 lakh chota, petty wala, petty shop, everywhere I have done, which means over 35 years, which means every type of problem I have seen, good, bad, ugly. So solutions are what clients want from you. Your knowledge is of no use unless it results in a solution to your client or to the company which is paying you the huge salary that you are going to demand. Otherwise, what is use of all the knowledge, sir? You tell me. Okay. So this is a sort of a Tarak mantra I keep on repeating in my lectures, even at the cost of irritating some of you. But please, keep it in mind. Sir, I am an all India rank holder, sir. I'm so proud of you. I salute you, sir. But can you give me solutions, sir? That is what client is asking. Okay. Chalo. Now coming to the point again. So current account transaction means a transaction other than a capital account transaction. Without prejudice to the generality, it includes, such transaction includes payment in the course of foreign trade, current business, services, short-term banking and credit facilities in the ordinary course of business, payments due as interest on loans and as net income from investments, remittances for living expenses of parents, spouse and children residing abroad, and expenses in connection with foreign travel, education, medical care. So, a lot of things. Okay. Now, current account transaction. Any person may sell or draw foreign exchange to or from an authorized person if such sale or drawal is a current account transaction. Right? Provided that the central government may, in public interest and in consultation with the Reserve Bank, impose such reasonable restrictions for current account transactions. Central government, please understand, reasonable restrictions on current account transactions are placed by or imposed by central government. Okay. Now, the central government has, in exercise of this power, issued the FEMA Current Account Transactions Rules 2000. Okay. When I came to PRIA, I told you, in case you went to sleep, wake up. Now, again, I'm telling you, please wake up, because this is very important. You should know it by heart, because in the exam, they could ask you anything out of this. I'm going to discuss the Current Account Transaction Rules 2000. The rules per se are not relevant, but these three schedules are very relevant. Schedule 1, read with Rule 3. Schedule 2, Schedule 3. Three schedules are there. First schedule, prohibited transactions. These transactions cannot be entered into straight away. You cannot take money out of India for any of this. Remittance out of lottery winnings. Robert comes to India, Swamiji, etc., goes to Kerala, buys lottery. Because in Tamil Nadu, he cannot buy lottery ticket. Goes to Kerala, buys lottery ticket. He wins. Oh, he thinks, okay, my fate karma is there. I won. I want to take this money back with me when I go to Los Angeles. Sorry, no. Whatever you won here, spend here. No, you can't take out of lottery. Similarly, any income from racing or riding or any other hobby, you can't take it out. Prohibited. Remittance for purchase of lottery tickets, banned or proscribed, not prescribed, proscribed magazines, football pools, sweepstakes, etc. See, gentleman I know went to Ireland. He stayed there for about a month or so, and he became an addict for what is known as the football pool. See, in Ireland, what they do, they have football matches. So just like you had your football matches, World Cup football matches, I don't know what that was. If I'm wrong, I'm sorry. I'm not a football fan, but I'm sure some of you are. So whatever matches were there. So I know people who used to bet on it. So they will say who will win, who will lose. Not for money, but this man, he went to Ireland. In Ireland, huge amount of money is, paid like that. So they bet who will win. So they fill up the form and say, today this winner and all. If they predict correctly, they win the sweepstakes. The huge amount they win. This is the greed that makes these people buy the tickets. And that's how that fellow makes money. Okay. And these fellows keep on buying. Even once this gentleman I'm talking about, he won 300 euros. 300 euros is a fantastic amount. I said, be happy, man, and come on. No. Again, 300 euros. He bought more tickets. But that was when he is in Ireland. Then when he came back to India, he still wants to purchase. Sorry, not possible. You cannot remit money for purchase of lottery tickets, banned or proscribed magazines, football pools and sweepstakes, nothing. So you can tell the Indian government, boss, you give me €300 now, I will lottery. When I win 300,000 euro or 3 million euro, I'll give it to you back now. I'll bring it back. Sorry, no risky things. Prohibited. Payment of commission on exports made towards equity investment in joint ventures, wholly owned subsidiaries abroad of Indian companies. So, where you are making exports, okay, to a joint venture or wholly owned subsidiary abroad, you cannot pay commission on it. Normally, see, suppose I want to get export business, I need to hire brokers who will get me that business. I have to pay them some commission. But when you are exporting to your own joint venture or wholly subsidiary abroad, sorry, you cannot pay any commission, because we permitted you to set up the wholly owned subsidiary or joint venture. You took huge amount from India for that. The idea was this wholly owned subsidiary will do marketing and get business. So why you are paying commission to that company? Prohibited. Wherever there is balancing applicable, you cannot remit dividend. For example, when you are getting foreign investment into India as part of foreign collaboration, they might say the foreign investor should not be paid dividend unless to the extent of that dividend or number of times that dividend you have made exports. So, for example, if you are deciding to pay $1 million as dividend to the foreign investor, you can. But while approving the foreign investment, we have said dividend balancing is applicable. Means you have to export 4 times the dividend. So if you have done that much, please. But if you have not done it, then dividend balancing is applicable. Then you cannot remit dividend. Friends, this particular class may become very outmoded today because today you don't need approval for anything. Foreign FDI is freely permitted except a few industries. Banking, insurance, name it, energy. So very, very few industries, only power, you need approval. Other than that, it's open. No need for any approval, no dividend balancing. Where dividend balancing is applicable, dividend cannot be remitted. Again, very, very important. Commission on exports under rupee state credit route. Okay, where you are approved under the rupee state credit route and the government has guaranteed the payment, you cannot pay commission on those exports. Okay, except 10% of invoice value of export of tea and tobacco alone is there. We feel we have to promote it. So, okay, pay 10%. Other than that, no. Payment related to callback services of telephones. Okay, so these are international fellows whom you make the call, a lady will tell you the horoscope or talk to you and all. For every minute, every second, you will have to pay in dollars, cents. And suddenly your telephone will be huge. Callback service is not allowed. The minute you try that stunt, your telephone operator will stop it straight away. Don't. It's prohibited. Remittance of interest income on funds held in non-resident special rupee scheme. Okay. Remittance of interest income on funds held in for example, if you have an international roaming facility from India, you call one of these numbers to US, you will find your service provider will not permit you. If that number is coming, he won't provide. He will allow you to make international calls, not to that number. Okay. Remittance of interest income on funds held in non-resident special rupee scheme. Because non-resident special rupee scheme, the interest is non-repatriable. The interest cannot be taken out of India. So you cannot remit it. It's non-repatriation. Repatriation means taking the money out of a country. When you repatriate, you take the money out of the country. So when you repatriate from US, you are bringing from US to India. When you repatriate from India, you are taking it from India abroad. So under the NRSR scheme, interest cannot be repatriated. The NRI who puts the money in that NRSR scheme cannot take it out. He has to keep it only in India. Okay, now we come to Schedule 2, read with Rule 4. You have to remember this somehow. I'm doing it with this, but yeah. See, rupee state credit route is a very old thing, yeah, not relevant. Shall we say it is not important and leave it? Explaining it, it's too waste. It is no longer relevant to you. Okay, I understand it is there. Those days it was there, mate. Now that is all heritage of your old pattern of thinking that you had only with certain countries like Russia, Poland, Czechoslovakia, and all the so-called communist countries. They were willing to take rupee. They were willing to take payment in rupee. See the pathetic condition. They were willing to take payment in rupee and all. So they gave you. So government lent you money for export and all, which is not a relevant. Okay. What is relevant here is remittance out of lottery winnings, racing, lottery tickets. This is important. Payment on commission on exports made through equity investment in joint ventures, only one subsidiaries. Dividend, even dividend balancing is not important. NRSR also not very important. Today, nobody invests in NRSR and all. No bank. Who invests even in bank? Okay, people prefer to go for mutual funds and callback services. Okay. Now, you want to take a cultural tour to a foreign country. For that, you want foreign exchange. You can get it, provided it is approved by the Ministry of Human Resources Development, Department of Education and Culture. Similarly, you want to give an advertisement in foreign print media for the foreign. you want to give an advertisement in the foreign print media, newspaper or magazine, you have to get approval from the Ministry of Finance, Department of Economic Affairs. Exception, promotion, tourism, foreign investment or international bidding exceeding by a state government and its public sector undertakings. See, so for example, many public sector undertakings have huge projects, huge refinery and all. So that refinery project can be handled only by foreign construction companies. So they have to publish that tender in the foreign magazine or in the foreign thing. That cost is allowed. For that, they can spend money. Provided it's a public sector undertaking, state government or public sector undertakings. And its public sector undertakings can do. Okay. Other than that, you have to get approval of the Ministry of Finance for advertisement in foreign print media. Okay. Because obviously, do you need it or not, they will ask. Why are you doing it? What is the benefit like that? They will ask. Remittance of freight vessel by PSU. Non-PSU, see, suppose you are hiring, you are an exporter and you are hiring container space on a ship. You don't have to get anybody's approval. It is freely permitted, current account transaction. You can give it to a foreigner also, foreign shipping company also. Even the TDS need not be deducted because they are exempted by a specific circular. You need not deduct TDS. Directly you can pay. Now, so, but if it is a PSU, then where the PSU is giving freight of vessel chartered by a PSU, they have to get approval from the Ministry of Surface Transport. Or payment of import through ocean transport by a government department or PSU on CAF basis. Okay. Cost, insurance and freight basis. Other than FOB, then Ministry of Surface Transport, the chartering. Right. Multimodal transport operators making remittance to their agents abroad. Now, this is a freight forwarder. Multimodal transport operator is called a freight forwarding business, where on behalf of an exporter or importer, I am hiring container space and I'll be having an agent abroad through whom I'll operate. Now I'm going to make remittance to him. See what happens now, I book the container now. So let us say I get $100. I have to give that fellow 80 or 60. I'll keep only 40 because I'm the Indian side. He is the guy handling the Dubai side or the London side. So I have to give him. Now, when I do that, I can do so only if I have a registration certificate from the DG of Shipping, Director General of Shipping. Okay. If that registration certificate is not there, you cannot remit to the agent abroad. Remittance of hiring charges of transponders. Okay. These are needed by two types of people. Transponders are for increasing the waves, the wavelength. You put transponders to receive, shall we say, in signals. Yeah. Transponders generally improve the signals. So you need huge transponders to receive signals from foreign television channels. So if you are a TV channel, you will need transponders. If you want to make a remittance for hiring charges, then you have to get approval from the Ministry of Information and Broadcasting. If you are an internet service provider, then you will have to go to the Ministry of Communication and Information Technology. Okay. Lastly, remittance of container detention charges exceeding the rate prescribed by the DG of Shipping. See, all this, this is all extremely interesting from international trade perspective. See, let us say that you are exporting goods. Okay, you are exporting through Shanghai. Now, Shanghai port operates on a turnaround basis. So, even if for 2 minutes your ship is delayed, you will have to wait. Okay, and if your goods are shipped, put on the port, on the bay, on the quay, straight away they have to be taken off. If the container movement guy is late by 1 day, they will charge you detention. So for that, boss, everywhere things. For example, there may be a strike in the harbor or some natural calamity, as in the case of tsunami and all, or pandemic and all that. There could be some delay. So they say up to this rate you are allowed to pay. Beyond that, if you want to pay, you have to get the approval of the Ministry of Surface Transport. Because it's a huge loss to the country, right? and so that you have to see. So sometimes, when your goods are not shifted from the port immediately, the port authority in Shanghai or Singapore, they will charge you demurrage. That is detention charges. And they will say, boss, you are keeping your container here. Another container is not able to come. He is losing. So you pay me. So demurrage charges. It's very, very costly. So if you're going to pay beyond the rate in foreign exchange, we want to know why. Why are you so inefficient like that? Remittance of prize money of sports activity abroad by a person other than international, national, state level sports bodies, if the amount involved exceeds $1 lakh. So chess championship was recently conducted. So an Austrian or somebody comes and they win. Up to 100,000, no problem, they can take it. Beyond 100,000, if they want to take it, they have to get the Ministry of Human Resource Development. But chess champion, no problem, because it happened under the international sports bodies thing. So there it is freely permitted. So that is why most of the time when we conduct these sports events, we ensure that it happens under the banner of an international, national or state level sports body. Then we have no problem. In fact, many chess competitions which I have been part of the committee conducting it, we go to the state level body and beg them to come and be a part. They will do nothing. They will not give any money. They will simply come and stand there. But if they are involved, then the prize money can be taken abroad without any approval. Otherwise, you have to get approval from the Ministry of Human Resource Development. Lastly, remittance for membership of P&I club. Okay, that is insurance, where you have to, if you want to be an insurer, you have to belong to the P&I club, and which means the Ministry of Finance has to approve for membership. Now, last, friends, the time now is about 7:50. I know some of you are becoming very tired. Listening is a very tiring activity, right? So don't worry. 8 o'clock, I'll give a break. Okay, hold on. Be patient. We'll finish Schedule 3, read with Rule 5. So Schedule 1, prohibited. Schedule 2, Ministry approval. What are the items? Go through it. Schedule 3, you need the prior approval of the Reserve Bank of India. Now, I'm going to answer Mr. Boni's question also. See, earlier, there were separate limits for all this. There were separate limits. Private visits to any country, $, except Nepal and Bhutan. Nepal and Bhutan, no dollar. You have to take INR and spend INR. If you are traveling in Nepal and Bhutan, before pandemic, I was in Bhutan. This March, I was in Nepal. Both the countries, you have to take only rupees. And both the countries, they will not accept any currency less than 2,000 or 500. They won't accept. No. They won't accept your $2,000. 500 they accept. For 2,000 rupees. 500 they don't accept it. I'm sorry, 2,000 they don't accept it. Because of counterfeiting and all, they're very worried about it. They won't take it. They say, give me 100 rupees and all. Who can carry 100 rupee notes all the way? So 500 sometimes chalega, but 2,000, no. So you have to keep it, bring it back. You can't spend it because they don't accept it. I mean, they won't obviously say we won't accept it. They will say, no, I am sorry, go. They'll act very smart. So better if you are traveling to Nepal or Bhutan, carry one bundle or two bundles of 100 rupee notes. And of course, don't bother. You use your credit card. Yeah, that is better. Nobody can ask you anything. But you can't pay in foreign currency for Nepal and Bhutan. Because these two countries should jolly well accept. Because why? Because everything we are supplying from India, boss, right from rice to pulses, we are supplying to them. And they have to pay in INR. So how they can demand our dollar? So they will take our currency straight away and be happy with what they are getting. Okay, good. Now, gifts or donations. You are such a charitable person. You want to give a gift to a foreign country. Okay, no problem. Going abroad for employment. Wow. Immigration, once and for all leaving India. Bye. Okay, going abroad. Bye. Everybody makes us happy. Some when they come, others when they go. Okay, then maintenance of close relatives abroad. Okay, travel for business or attending earlier, travel for business, $25,000 was the limit. Now all these are combined on one head. I'll tell you what it is. How much is the limit? Travel for business or attending a conference or specialized training or meeting expenses for medical expenses or checkup abroad or for accompanying attendant, all that cost. Expenses in connection with medical treatment abroad, studies abroad, any other current account transaction not left out of this. Total limit for all these transactions for the whole year, one financial year, up to US dollar 250,000. Got it? For all these matters, cumulative, not as if every one of them it's a separate, no. Total cannot exceed US dollar 250,000. Okay. This remittance will be made through the liberalized remittance scheme. Okay. But for the purposes mentioned at 4, 7, and 8. 4, immigration. 7, medical treatment. Is abroad. There alone, okay, you will have to find out what is the amount they are prescribing. Okay. You can't take in excess of the limit prescribed under LRF if it is so required by a country of emigration, medical institute. Other than 4, 7, and 8, the limit is 250,000. But 4, 7, and 8, suppose you are calculating medical treatment is getting more than US dollar 250,000, no problem. Whatever has been estimated by that medical institute offering treatment or the country of emigration or the university, up to that extent you can take. The limit of 250 won't apply for 4, 7, and 8 alone. Okay. So an individual may avail of exchange facility for an amount in excess of the limit. Okay. That is note 1. Now, please be careful. Other than 4, 7, and 8, that is immigration, stay abroad, medical treatment abroad, and studies abroad. Other than these, all other payments, total limit 250,000. Now, if you remit any amount under LRS in a financial year, then the applicable limit will be reduced from US dollar 250. So, for example, traveled abroad, went to south of France, okay, Cannes, Riviera, Monte Carlo, enjoyed. Okay, $50,000. No problem. Spend it, private visit to any country. But that $50,000 which you withdrew for that would be reduced from your annual limit. Now only $200,000 you got. So it's a cumulative limit. It will keep on reducing. But up to $250,000 you can take. And Mr. Boni Joseph, now to answer your question. Can I take money out and buy a property? Yes, you can. Up to $250,000. And that again, see, suppose you want to buy a house in Italy or you want to buy a house in Dubai. No problem. Take the money. $250,000 you can take per annum. Okay. That 250, if you are also going to travel, etc., one of these, then that will also be reduced. Then be careful. So in a year you can do. So if you take that entire $250,000 abroad and you are able to locate a property, buy it. Up to $250,000, no problem. Okay, buying a property abroad possible. In fact, early stages of LRS, this is called liberalized remittance scheme. Early stages of LRS, when I told one of my clients, you can take it, then he was shocked. Shrikant, are you telling me I can take at the time it was $200,000. $200,000. I said, yes, sir. Income tax won't ask me. Sir, income tax may ask but anyway, it's going from bank, sir. No. Nobody will ask me any question. I said, sir, no, sir. It's liberalized. He was so happy. He took some money abroad and he purchased a property. No questions asked. Up to 200. But think about it. What is $250,000? What did you get for that? Check out the property. Maybe Greece. Go to Greece. Or maybe, like that. You can get some Greece and all maybe. Okay. So, point 4 still not clear. What is point 4? Immigration. Now, which is point? There is no point 4 here. Which point 4? Can you be specific on that? Which one? Point 4. I will definitely explain. No. If only $1 US, then $249,000 you will have. But I don't understand your question. $1 for LRS use limit. So some of your questions are very peculiar. If you use $1, then it will come down by $1, like that. Got it? Spend $50,000, then it will come to $200,000. Maybe the way I explained was not clear. 4 is emigration. Emigration means leaving India and going to a foreign country once and for all. Okay, emigrate to a foreign country. Opposite of emigration is immigration. When you come in, when you come from through the international terminal, and you come into India, there you will find immigration. That is for people who are coming from abroad into India. Indian citizens, straight away they'll go. Others will go through that. It's called immigration, where you are coming into India. You're going out of India, it's called emigration, going out. Once and for all, to stay there, never to come again. Okay. Then you have to take money now, you have to settle down there, right? So there they permit you to take beyond $250,000, up to whatever the country of immigration wants. Say Australia may want you to bring something like 100,000, 1 million Australian dollars. If you bring, you invested in Australia, you come, open, they will welcome you, then come there and then you can work, earn, enjoy, do whatever. That is called immigration. If you are understood, kindly confirm it, Aniket ji. Okay. See, a person who is the resident but not permanently resident in India and is a citizen of a foreign state, okay, or a citizen of India who is on deputation to the office or branch of a foreign company or subsidiary or joint venture in India of such foreign company, can make remittance up to his net salary after TDS and all and contribution to PF. The full amount can be sent. See, suppose an Italian is coming to work in a special economic zone and he has family living in Italy, let us say. He wants to send, for example, we had one client whom was a Finnish company where the CEO, local CEO was an Australian, family settled in Singapore. So the gentleman wanted to be paid in India salary because Indian tax was cheaper. So he got paid in India, TDS in India, cheaper than Australian. He's an Australian citizen. Then he wanted to transfer the entire amount to his Singapore account. Why not? Fully allowed. Because he is a person who is a resident but not permanently resident. He is a citizen of a foreign state. Okay, Australian citizen. Fully he can take it. Similarly, a citizen of India who went abroad, he is still a citizen of India, but he is an employee of a foreign company. He is now here on deputation to the local branch of that foreign company. He can also make remittance up to his net salary, except Pakistan. All other countries, they can do. If he is a citizen of Pakistan, sorry, he cannot take any money out. Okay. Who is resident but not permanently resident? Okay. So for the purpose of this term, here we specifically define a person resident in India only for this purpose. Otherwise, no. That concept is not there in FEMA. For this purpose, for salary alone, they say a person resident in India on account of his employment or deputation of a specific duration, irrespective of length. It could be 6 months, it could be in 1 year, 3 years. The duration of which does not exceed 3 years is a resident but not permanently resident. So foreign citizen come to India for up to 3 years employment or deputation is a resident but not permanently resident. Okay, I think this is going to take a little longer. So this is a good point in time to declare a small break. The time now is something like 8:05. So we will say we will start again at 8:15. Okay. Welcome back from a well-deserved break, and let's jump back into current account transactions. Basically, we saw the last schedule, which deals with transactions which require the prior approval of the Reserve Bank of India, not the ministry, but Reserve Bank of India. So we saw one omnibus thing with an upper limit of $250,000. With 3 items specifically taken out. See, suppose any of these 3 items, 4, 7, and 8, require more than 250, you can take, subject to the requirement by that country and all that. Now, you might ask me, who will control all this? How does this get monitored? I'll tell you. It gets monitored by the authorized dealers. Ultimately, if you want to make a payment, brother, you have to go to a bank. Okay? You want to get foreign exchange, you have to go to a bank. These banks have been given specific instructions. That is why these rules are applicable to banks. Later on, we'll be seeing capital account transactions. We'll be seeing RBI directions. They are called APDIRs. That is authorized person directions. So these directions are not given to you and I. They are given to the authorized persons. The authorized persons have to comply with the directions. Now, why you and I are studying those directions? Because we should know what the authorized person's role is. So he will be very clear. See, if you go to any bank and say, I want to do this ODI, immediately he will print out the APDI circular and give it to you. That is the FD. ODI, there is a separate master circular. Is that from that he will take ODI part and give it to you. So please read this. Whatever is that, I will do. So that is why we need to understand what that is. Okay. That is called APDIR circulars, authorized person directions. Okay. All this is monitored by the authorized dealer. We'll come to authorized persons a little later. Right now, it's a common term that we use for all. Authorized dealer, money changer, offshore banking unit. All together, we call it AP. But mostly it will be only AD, that is authorized dealer, which is a bank, okay, which is authorized to deal in foreign exchange. That's called AD, authorized dealer. Okay, now some other types of remittances are also contribution to funds promoted by educational institutes or contribution to a technical institution in the field of activity of the donor company. Then you can give that up to 1% of the foreign exchange earnings during the previous 3 financial years, or $5 million, whichever is less. 1% or $5 million, whichever is less. So if you got huge export earnings, still it is restricted to 1% or $5 million, whichever is less, you can give. For example, let us say your MD studied in Harvard University or Stanford University. So now he wants to give a chair. That means the salary of a professor would be funded by that amount. So you have to deposit a huge amount so that the interest from that amount would be paid as the salary of a particular professor. So you can say philosophy chair, chemistry chair. So that chemistry, the one professor from the chemistry department would be funded by this money. Like that. That is called creation of a chair. So they are called chairs. Okay. The chair means seat. So his salary. So for that there will be a huge competition. Only the best candidate will be selected. His salary will be funded by this bursary and this chair. It's just a thing. In those days in England, it started with England when certain noblemen who had money used to create a chair and say for this subject, philosophy, we can, because in philosophy, spiritual studies, etc., do not get any income. Nobody will give money. So who will study? So they said to encourage it, we will give this. And university also may not want a chair for philosophy because who will study philosophy? So it's given. So people who want to study philosophy like me, even though we don't have any money from that activity, because only CA will give me money. If I study philosophy, how I will get money? So, but still, philosophy is an important subject. For that, we create a chair. Okay. So, commission per transaction to agents abroad for sale of residential flats or commercial plots in India. Friends, there is a little bit of a confusion in the minds of students for this item. I'm going to explain. If you finished your cup of chai, very fresh mind, listen to me. So commission is being paid by what? You are going to pay to agents abroad. For what? For sale of residential flats or commercial plots in India. Now you are a residential construction company, building company. You are constructing, you have identified a huge tract of land a little beyond Vashi in near Navi Mumbai, and you want to promote it. And you are basically an origin from Kerala. So you know that there are a lot of people who are abroad in Kuwait and Dubai and Bahrain who have a lot of money who want to settle in Bombay because maybe their relatives are staying in Bombay. So they want to come and settle in Bombay. So you want to promote this huge, beautiful residential township concept in Bahrain, Dubai, Kuwait. So obviously you go there once and you call up people, give them a road show and all that, show them how they will live. Kuwait is nothing. I'll create Kuwait in India like that. So whatever it is you tell, but then actual sale has to be promoted, right? For that you need agents. And that agent will not do free service. Yeah, you have to pay him commission. Now there is a cap on that commission up to $25,000 or 5% of the inward remittance, whichever is more. You understand? So $25,000 or 5%, whichever is more. Suppose your 5% comes to, for example, 5% comes to 10,000. Then up to $25,000 can be done. Na? Even though this is thing, 10,000 you can pay. Suppose your 5% comes to $50,000. Then also you can pay because 5% or 25,000, whichever is more. You understand? You can pay. That whichever is more is very, very important. Now, approval for this activity should be taken even if the payment is made out of RFC means receipt account. EEFC means exchange earners foreign currency account. Idea is they permit you to keep some money in foreign currency in an account called RFC account. Suppose you are getting any income from abroad, you can keep it in that RFC account. Suppose you are getting any remittance from abroad as income. So you are doing some blogging or some thing, advertising, Google, and you're getting some money, dollar, you can keep it in RFC account. Or if you are an exporter and you're getting export remittance, you can keep it in EFC account. RFC and EFC accounts will be designated in foreign currency. Suppose you have deposited $2,000, it will be held in $2,000. Whereas any other account, what will happen? On that day, they will convert $2,000 and put it in the account into equivalent INR. He told, $2,000 belongs to Government of India. The money belongs to you, the forex money. But in the case of RFC and EFC, they say, chalo yaar, if you open an EFC and you keep it, it will be kept. Now, this sounded very attractive once upon a time when dollar was constantly strengthening. Never say rupee is weakening. Always say dollar is strengthening. Okay. Never say rupee is weakening. Okay. So dollar was always strengthening. So they get money. Suddenly what happened? Once completely due to this global financial meltdown, dollar started weakening. All exporters were in deep shit. And anybody who was having money in EFC account, overnight, in INR terms, it was loss. You understand? Dollar same amount, but INR conversion gone. Rupee has strengthened now. Now I can tell proudly. Rupee has strengthened now. But never tell rupee has weakened. Okay, you are prohibited from telling rupee. You can tell dollar is strong, but you cannot tell rupee is weak. Okay, I mean, they are mirror images. Yeah. Sorry. If the dollar is strengthening, it means rupee is weakening. If the rupee is weakening, it means dollar is strengthening. But you can't tell rupee is weakening. Because there is a non-patriotic behavior. You should only tell dollar is strengthening. Okay. Anyway. Remittances for any consultancy services procured from outside India. Up to 10 million per project for infrastructure projects. And up to 1 million per project for other consultancy services. This used to be an omnibus opening, where if you go to any bank and you say, I want to make payment without any giving the reason and all, they will send it through this route. Consultancy services, they will send it. You can't do it because TDS is there. So many other issues are there. Earlier, that was not there. They used to simply send the money out. That was very dangerous. Bankers, see, many of these FEMA violations happen, because the AD himself encourages it. I'm sorry to say this. The AD is also not as if they are God. They want to get that company, that business, and also they give some wrong advice. Many clients have told them, they come to me after the event. I say, who told you to do this? It is wrong. No, the bank only told us. No, bank fellow doesn't know. But some banks are very careful. They will go to their EC. They have their own exchange control department. Unless they are approved, they won't allow it. In fact, if you want to know who is the ultimate expert in FEMA, it will be a banker. Ideally, a chartered accountant banker who has worked in a public sector bank for 15 to 20 years in exchange control. That man will be an ultimate authority on FEMA. Like that, I used to have 2 consultants empaneled with me. And whenever I had a bigger doubt, means up to a certain level, I will go. But when I go a little beyond that and I have practical doubt, I'll say, please, sir, can I do this? Can I? So they will know practically what is the issue. Theoretically, yes. Practically, so to answer the main question of Aniket, everything one man cannot know, Aniket. Accept that you can be ignorant, that you can consult other people also. But your real talent is not in knowing everything in depth, but in knowing little bit about everything, so that you know what is the framework and up to one level. Beyond that, you can always consult an expert. What is there? You need not be an expert in everything. Don't attempt to be. Okay. Remittances by an entity in India by way of reimbursement of pre-incorporation expenses. But today, believe me, that expertise is also gone. FERA was very confusing. Today, FEMA is fairly simple. All you need to do now, you download the DIR, directions, the foreign, whichever it is. Go through it. Take notes. You will have your answer. I have done it so many times. The latest circular, I will take it out. Quickly, I will see what is my issue, what is the answer. Everything is there. Simply, I will give my opinion. This is what you have to do. So easy. But for that, you should be thorough with the directions. Okay? Given by the Reserve Bank of India. Same thing goes for SEBI also. For LODR, to an extent, if you know it now, then you can always refer to it and say, this is what happens in this case. Boss, your exam is only closed book. Once you pass the exam, it's open book. Yeah. You can keep the book and talk. Nobody is going to ask you why you are opening the book, why you are not knowing it by heart. Client is not bothered. So long as you give him the answer, he is happy. Remittances by an entity in India by way of reimbursement of pre-incorporation expenses. Up to 5% of investments bought into India or US dollar 100,000, whichever is higher. So, you are reimbursing pre-incorporation expenses. You are sending money abroad. So, up to 5% of investment bought into India or US dollar 100,000, whichever is higher. Okay. So, it's a limit up to this. So, these are the thing. What happened now? What was broken up into many has now become combined into one single limit. Okay. Now, if the transaction is not listed in any of the above 3 schedules, it can be freely undertaken. Remittances made for the transactions listed in Schedule 2 and Schedule 3 from RFC and EFC account do not require approval. Other than your commission. This alone, even if it is made from RFC, EFC, you need approval. Other than this item, everything else requires approval. I mean, if it's done out of RFC and EFC, it does not require approval, right? Now, here are some practice questions just to help you to reinforce the concept, right? So, Mr. G, an Indian national, decides to obtain foreign exchange on current account transactions for the following. Payment of commission on exports made towards equity. Straight away, you've seen the ugly face, yeah? In that Schedule 1, prohibited. Remittance of hiring charges of transponder by TV channels. Boss, again, this question is silly now. G is applying. Here they are talking about TV channel. So we will assume that G is having a TV channel. Okay, whatever it is. Even the TV channel will be owned by a company, right? It won't be by G. Anyway, let us assume that G's proprietary concern is also a TV channel and they want to hire transponder. Then what they should do? You should get it from the Ministry of Information and Broadcasting. Am I correct? So advise G whether he can, if so, what conditions straight away. Usually one more secret I will tell you. They'll give you 3 such questions. One will be schedule 1, second will be schedule 2, third will be schedule 3. To that extent, you can be confident. Anyway. But not always, huh? Not always. Not in this case, not. So F, an Indian national, desires to obtain foreign exchange for the following purposes. Payment of $10,000 as commission on exports under rupees debt credit route. Pause. You don't know what is rupees debt credit route one. You don't, no problem. You know that this is prohibited now. That's all. You have to pay. Okay. $30,000 for a business trip to UK. Earlier, the limit was $25,000. Now you understand that $30,000. Earlier it was $25,000. So beyond 25, you have to get approval. But now, no need for approval. Why? Because it is subsumed in that LRS, $250,000. So you simply say it can be taken up to $250,000, subject to the fact that any other payments made would also be reduced. So if sufficient amount is there under the LRS, you can take it. No need for approval. Remittance of $200,000 for payment as prize money to the winning team in a hockey tournament to be held in Australia. Okay, provided if it is not under the national or international thing, then you have to get approval of the ministry, right? Ministry of Youth or A Limited, an Indian company, desires to obtain foreign exchange for the following purposes. Remittance of $10,000 for payment for goods purchased from a party in Nepal. I told you, Nepal has a lot of issues. That's why we got special permission for Nepal, because payment is coming directly from abroad. I am not sending it from India. In my example, the payment did not go from India because there is a prohibition. Therefore, we said directly let the payment come to him from abroad. And for that, we got permission because my invoice won't come to India. It will go to Nepal. So that alone we got took permission. That amount was split and paid. And one portion went to Nepal, one portion came to me. Because, see, I can't have the whole amount going to him and coming to me. Why? Because he will know my margin. So I said, only his amount it goes, then my amount let it come. Right? I got specific permission from RBI. Nothing wrong. See, purpose of RBI is not to prevent you from doing business. Purpose of RBI is to prevent you, if at all you are doing money laundering or anything against the interest of India. If you are doing genuine business, they are here to help you. In fact, many RBI officers are very friendly. They are good. They help you. They act as consultants. They actually advise you what to do, what not. So if any doubt is there, best thing is go to the ECD, talk to, or better still go to the AD. And the AD actually will advise what to do. At least the AD will tell you this cannot be done. Then you have to go to RBI. Generally, when they come to me, I will tell them it cannot be done. Then we go to RBI and that's enough. But if it can be done, then the AD can do. You don't have to bother. Okay. So, see, in fact, FEMA activity is one thing that is a very good lucrative work. It's a little bit of effort if you take now, you can handle it well. And it will be a nice dosra for you. Side, you can have a nice audit and taxation practice and with occasional forays into FEMA practice. Nothing wrong. But that alone, standalone, I don't know. Then you must be should be concentrating on that. And even then, I tell you, not over. Okay. Remittance of $10,000 for purchase from a party. Sorry, no. You have to pay only in Indian rupee, not in US dollar. $10,000 for remitting as commission to its agent in USA for sale of commercial plots situated near Bangalore. See, here the logic is Bangalore. So many of the so-called NRIs, were B2C fellows, back to Chennai, B2B, back to Bangalore. They may want to buy this plots. So they want to sell it to them when they are earning in USA. Okay, consideration in respect of which was received by A Limited. So they want to spend $10,000 for remitting as commission to agent in USA. How much have they received? $100,000. So 5% allowed, na? So 100,000 into 5%, $10,000, $5,000. No. 5% of the inward remittance, or 25,000, whichever is higher. So $10,000 allowed. This is a question where some students have a doubt. I am clarifying it once and for all. It is 5% of the inward remittance or $25,000, whichever is more. Therefore, you can pay $10,000. Even though 5% is only 5,000, you can still pay because it is still well within the limit of 25,000. Okay. Got it? So, as you see, do you notice one thing? This is a frequently tested area. Regularly, one question. For a lucky, in what is that, roulette, the swing of the roulette wheel, this could come. And you'll be ready for it because you know it. In fact, one more small revision, you are ready for this question here. So, if you see this question in the exam, say hallelujah, and you say praise be to the Lord, and start writing the answer. Don't waste any time. Okay. Examine with reference to the provisions of the FEMA and the rules made thereunder whether foreign exchange can be drawn for the following purposes. Gopal, a senior artist in India, proposes to organize a cultural program at Dubai. So he wants to do, no problem. He has to get the permission of the Ministry of Culture. Okay, Education and Culture, whatever. Mr. Shah proposes to visit Schedule 2. Please don't forget to mention Schedule 1, 3, Schedule 2, Rule 4, Schedule 3, Rule 5. Just remember that itself. Mr. Shah proposes to, the rule is current account, foreign exchange management, current account transaction rules 2000. Just remember that. Mr. Shah proposes to visit United States on a business tour. And for this purpose, he wants to draw foreign exchange, US $40,000 for meeting expenses. No problem. Up to 250,000 he can go, yeah. What is that? Enjoy. Oh, Mr. Rohan. 120,000 for studies abroad, up to 250,000. But suppose this 250,000 is exhausted, still no problem. Up to the amount estimate given by the foreign university, he can take. You remember? This is an exception. 8. This is the exception. Gift remittance amounting to US $10,000. No problem. Up to 250,000, Mr. Rohan can take. If Rohan has not exhausted his LRS, both the amounts are allowed. Fully. Take it. Enjoy. Right. Now we move on to capital account transaction, which is defined. It is defined. Capital account transaction means any transaction which alters assets or liabilities in India belonging to a person resident outside India, or assets or liabilities including contingent liabilities outside India belonging to a person resident in India. Suppose I just follow the arrow. Assets or liabilities in India belonging to a person resident outside India, or assets or liabilities outside India belonging to a person resident in India. So these two, do you notice one thing? There is a cross-border implication. PRII, property outside India. PROI, property in India. Got it? So, foreigner wants to buy in India. Indian wants to buy abroad, capital account, because foreign exchange will move permanently out of my country. We have not opened it out yet still fully. Capital account transactions are prohibited unless specifically permitted. Even now, we are not willing to permit a foreigner, a person resident outside India, to buy agricultural land in India. He cannot carry on agricultural operations. He cannot deal in real estate. Plantation activity is prohibited. We'll see that. It's going to come anyway. So any person may draw foreign exchange from an authorized person for a capital account transaction in accordance with the regulations made by the Reserve Bank. That is why all these regulations become very important. The APDA are circulars. The authorized person direction, each one is a regulation. See, the regulation is contained in the direction as a circular. Okay. Matters in respect of which RBI may specify permissible. Okay. So they have been constantly liberalizing this. Lot of liberalization has happened. Okay. Thank you. Now, actually from now on, we'll be seeing mostly only capital. We'll be going back to export and import, and then we'll be going to capital account transactions. Okay. Without prejudice to the provisions of this section, the Reserve Bank may by regulation prohibit, restrict, or regulate establishment in India of a branch or office other than or other place of business by a person resident outside India. So actually there's a separate regulation for that, not covered in your syllabus. It is there for this setting up of a business branch or a place of business in India and all that. Right? Now there was an earlier section 6.3 which gave a list of capital account transactions. That has been removed. Instead, they give you the regulations directly. See, these are prohibited straight away. If you are a person resident outside India, you are prohibited from making investments in India in any form, in any company, partnership or proprietary, either directly or through a proprietary or a partnership firm or a company, which is engaged or is proposed to engage in chip fund business, nidhi, agricultural or plantation activity, real estate business. Except that, real estate, they are excluding development of townships. That is why specifically I said development of townships, construction of residential, commercial premises, roads or bridges and real estate. In trading in transferable development rights, CE, suppose you are having some, you are a construction man in Mumbai. Now you want to construct a 7-story house. Now you need to give what is known as FSI, floor space index is there. So what happens now? Mumbai Development Authority would say, okay, suppose you are having a factory in Vashi and there you have done some pollution control. We will give you transferable development rate. Whatever you have saved there, I will allow you to attain additional FSI in Mumbai. So that is called TDR, transferable development rate. Now I have a factory in Vashi. I'm not constructing in Mumbai, but there is a construction guy there who needs that FSI. So he will come to me and he will buy the TDR. So the idea is this, just theoretically, again, Aniket, pure theory. In reality, it is totally different. It is similar to that carbon credit. You do some pollution control, you get carbon credit, which you can sell, make money. Okay, Mr. Banda, a software engineer, Indian origin, took employment in USA. He is a resident of USA for a long time. He desired to acquire a farmhouse in Munnar, in Kerala, to make an investment in KLJ Nidhi Limited. Farmhouse, no, because it will amount to plantation and agricultural activities. Sorry. Because farmhouse will be constructed in a agricultural plot. So it continues to be agricultural plot. So he can't engage in agricultural operation. Even if he is growing 2 coconut trees, agriculture, not allowed. Be careful. It's a very important point, FEMA. So especially my friends from Kerala, you just come and buy, no. You have to invest, you can invest in a house property, but not in a farmhouse. To make invest in KLJ Nidhi Limited, sorry, no. To make investment in Rose Real Estate Limited, an Indian company formed for development of township. Township allowed, no problem, enjoy. But you can't invest in a real estate company. Real estate means identifying land, getting permission, plotting it, selling it as separate plots. That is a pure real estate business. Foreigners are not allowed because we are still worried about, our country has had a succession of foreigners coming in and taking land. And so our country's land is taken up by people who came from outside. So we are mortally afraid of that. Still don't want foreigners to acquire land. Serious problem. Don't think that I'm joking or politicizing it. What I'm saying, USA had that problem, boss. In the 80s and 90s, the Japanese were very strong. The very Japanese who had been defeated in the World War II, they came back with a vengeance. And they started buying huge, for example, Sony Corporation, Toyota Corporation, fellows are too rich. So Japanese fellows were having so much money. And so they simply came to New York, Manhattan, buy a 15-floor building. They were owning. Akiro Morita, the guy who, he purchased Chrysler Corporation. He purchased the company itself and so on and so forth. But that was Japan in its heydays. Then you know what happened to Japan today after the Koreans came and started destroying them on the market. But then, many Americans were angry with Japanese. And one comment which Japan told was, if you don't want Japan to buy, don't sell. The reason is, America did not have any restriction on buying and selling. Any foreigner could come and buy. and any American could buy abroad. So India, we are still worried about that. So you cannot go and buy. We are slowly liberalizing that. We are allowing you to go and buy abroad up to $250,000. But he coming in, we are still worried about it, especially real estate and all. Any capital account transaction requires permission. Please understand, assets are liabilities. Assets are liabilities in India. Alteration of assets or liabilities in India by a PRY. Alteration includes purchase, sale, etc., exchange, etc., everything. Okay. It requires approval of RBI, either general permission or special permission. Okay. Got it? So no person shall undertake or sell, draw, or foreign exchange to or from an AP for any capital account transaction. Exception. Mr. Boni Jose will now understand what I meant. A resident individual may draw from an authorized person forex not exceeding $250,000. What is this? This is your LRS, Liberalized Remittance Scheme. Same amount or such amount as decided by RBI for a capital account transaction specified in Schedule 1. So the LRS limit of $250,000 available under Schedule 3 of, do you remember? That $250,000 is subsumed in this amount. So if you are going to use it for that, then you can't buy property. If you buy property, you can't use it there. You got the point? So totally in a year, boss, $250,000. You want to enjoy, go to pub and drink beer and spend it, do it. If you want to buy a property, whatever you want to do, up to $250,000. Okay? So this is a kind of liberalization. Where the drawal under this head exceeds the LRS limit, then further drawals, even for current account transaction, require approval. So do you able to see the link between this and Schedule 3 of the CAT rules? Yeah. Now, please be careful. Just because you have been given permission to take $250,000 for doing this capital account, you cannot use it for remittance directly or indirectly to countries notified as non-cooperative countries and territories by FATCA. That's called Financial Action Task Force. Very important. If you want to know more about this, please go to the Google and just put Financial Action Task Force and you will get a list of countries. Google in Wiki, you will get it. Financial action. There are 3 levels are there. Extremely prohibited, somewhat prohibited, but be careful countries like Cayman Islands, Seychelles and all. You got Brunei and all on top there. Brunei. Because see, most of these notified non-cooperative countries do not have extradition treaties. For example, your friend, what is that fellow? Nirav Modi's uncle, fellow went and sat in a country called Antigua. Do you know that? It is in the Caribbean islands. It's a place called nice, beautiful tourist destination. Okay, Antigua, one of the places I would love to go, but not like Nirav Modi, not after cheating the Indian public. I want to go with my own money and stay. It's a beautiful place. You go in a cruise in the Caribbean islands, Antigua. But Antigua does not have an extradition treaty. Means if you go and sit in Antigua, Indian government cannot catch you. Okay, so here is a clue what you have to do. So obviously you can't invest in that country. Now you understand? Nirav Modi cannot send to Antigua because Antigua is in the Financial Action Task Force. So how did he take it? That is a different story. Okay, that is a story which we will talk about when I come to PMLA, Prevention of Money Laundering Act. I will tell you how that fellow would have money laundered and taken the money out to Antigua. That is a different story. Under FEMA, sorry, not possible. Through authorized dealer, not possible. If authorized dealer is helping you to do it, first he will go to jail. Then if you are available in India, you will go. You means that person will go to jail. Okay, I shouldn't say you. Sorry. I hope none of you will do it, huh? Because, friends, when you are a student or even if you are a young chartered accountant just completed, you will be very, very proud. You will say, sir, I will be very, very pure. I will be very honest, honorable. But then when Satyam wants you to sign the balance sheet, at that time we should decide whether you are going to be ethical or not. Till now, what is the ethical dilemma for you? But when that ethical dilemma comes, when the huge money is there, and you want to sacrifice it and be honorable, then we should see whether the ethics are there. Okay. Till then, no, everybody can be ethical when there is no opportunity. Only when the opportunity comes, you have to be ethical. Am I correct? Yeah, as you rightly say, Aniket, there is a grey list, black list, red list is also there, I think. Brunei, be careful. Brunei, pirates are there. They will catch you and take you there and take ransom and all. Brunei is actually called Borneo. It is part of Indonesia. In fact, Brunei, Indonesia, you have Malaysia also part of Malaysia, part of Indonesia. Many countries are there in that area. But again, a beautiful tourist destination, Brunei, but dangerous. Very, very. In fact, I was in another country, but that's not a FATCA. I don't think that's a FATCA country. But I went there. I don't think Uzbekistan is still a FATCA country, but there's a very strong mafia there. So about 20 of us went there on a tour. And when we were there, we stayed in Tashkent. When, in our bus, two fellows will be sitting. Two Russians will be sitting there always. And I don't know who they are. The driver is there. I am on attendance, plus these two guys will come. I don't know who they are. They'll simply come. Whenever we stop, they'll go out, smoke, be there. I asked my tour leader, hey, who are these two guys? He said, don't talk, Srikanth. They are the local mafia who are protecting us. So we have paid them some amount so that no other mafia will come and hit us. No other mafia will come and kidnap from us. For that, we have paid them some money, like that you were saying. So that is, so thereafter I used to be very careful when I went, because for all I know, they may still catch me and take me and ransom. Okay. Believe me, international travel is both fun and dangerous. Okay. Sometimes you have to be very careful. Okay, good. So, okay, here is the problem. I am a PRIA, okay, from Kerala. I belong to a Tharawad, and I'm not me. I am not belonging to any Tharawad, but give example, I am a Keralite, I am coming from Kerala, and I have a Tharawad, and that Tharawad is having huge property. And I am also co-owner. I went abroad, I went to US, I settled down, I don't bother about all these things. But what to do? One day those fellows sold their property. Can I sell? Now a PROI. Now I am a PROI, right? Abroad. May hold, own, transfer or invest in Indian currency, Indian security or any immovable property in India if the same was acquired, held or owned by such person when he was a PROI or inherited from a PROI. Understand? So I went abroad, but my grandfather, my grandmother, I will correctly speaking, then to my mother, and then getting it. Now what happened? That it was inherited. Now I may be PROI, but I can still continue to hold, own, transfer, invest in an immovable property in India. If it was acquired or owned by me when I was a PRIA, sorry. If the same was acquired, held or owned by such person when he was a, I think there is a small mistake here. Sorry. Both should not be, na? I'm so sorry about that. I'll correct it immediately. This is PRIA. Okay. I don't know how this got missed. I'll correct it in my, when I'm sharing it with you, I will correct it, except that please understand, here it is PRIA. Here is PRIA. Okay. Sorry about that. Huh? In fact, this correction I did it in my last lecture. I think I forgot to save it. So sorry. So the same was acquired, held or owned by such person when he was a PRIA or inherited from a PRIA. Same way, PRIA. Now I have come to India, but I was owning a property when I was a PROI. I purchased a property. Let us say. I can continue to hold that. Provided it was acquired, held or owned by me when I was a PROI or inherited from a PROI. Okay. I don't know if this is ever going to happen. No? Will we ever see the diaspora coming back? Maybe we can see going out. But can we ever see them coming back to India? I doubt. Very difficult. Huh? So, okay. As I told you, there is something called authorized person, which we have to talk about. The time now is almost 9 o'clock, 2 minutes more. I don't know. But I think we can go ahead and do it. As I told you, authorized person consists of three categories. Authorized dealer, money changer, offshore banking unit. Or any other person, only these three guys are there. So mainly aiding banks. Okay. Now the RBI, the authorized persons are appointed under section 10. Okay. You have to make an application. Boss, there's a huge capital norm. I have a lot of money changer clients. They have they have to show 5 crore capital. Only then they can become a money changer. Minimum full-fledged money changer. FFMC means he will have a small box shop where foreigners will come, sell dollar, sell whatever currency, euro, and he will give rupee. Then again, they will come and give rupee back, he will give dollar. Provided he has to take their passport, make an entry, he has to note the passport number in his register. Lot of controls are there. Okay. That is called full-fledged money changer, where he can buy and sell. Then you got something called restricted money changer. Means you go to a handicraft shop, in Chennai on the main Mount Road, as we call it, it's a huge road there, where we have a Victoria Technical Institute, PTI. So you come there, you're a foreigner, you come there, you see a beautiful Nataraja bronze idol, just 5 lakhs. In dollar, it's nothing for you. Okay, but you don't have money, but you got dollar. So you give the dollar, he can take. But only he can buy, he cannot sell. He can take $500, give you the whatever money it costs. He can give you the Nataraja idol, and he can give you change in INR. Okay, but he can't he won't return in dollar. He can't give you dollar. He can take dollar, not give. That is called restricted money changer. Like handicrafts emporium, star hotels, okay, restaurants, they have that. Same thing happened to me when I was recently in what's this country where they allowed wanted to forget Sri Lanka. Sri Lanka, they were willing to accept Indian rupee, but they will not give change in Indian rupee. They'll give only in Sri Lankan currency. So you take it out. So we were even willing to. Can you imagine? I didn't want to buy the Sri Lankan currency itself. I want to keep it in Indian rupee. So they said, we will take Indian rupee, and they gave a very good exchange rate. But one thing, any change we will give back only in Sri Lankan rupees. What will I do with Sri Lankan rupees? So sometimes, best thing is to have a card swipe. That's the best. Okay. Such an authorized person may function as an authorized dealer, money changer, or offshore banking unit, or in any other manner as he deems fit. Okay. Now, the authorization shall be in writing under section 10, etc. We have come to the limit of our time. I have even gone 1 minute extra. Let me not further delay your dinner. I will now call an end to the class. We will continue in the next class. We have 3 hours. I will continue with this, then go on to export and import, ODI, then ECP, all that. Okay? Fantastic. Wish you a great evening ahead.